This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, fashion designer. Do you know this new thing, Paul, that we got this year? That Lisa's color coding us. Do you see this, Lisa? We got the Hermes light orange going today. Good job, Lisa. We're color coordinated for Friday, getting you to a key report. I'm sorry, Paul. The 8:30 report was important on Wednesday. After yesterday's festivities, this is a huge deal at 8:30 today.
It is. We're going to get, this inflation picture, Tom. I think a lot of investors are looking at the PCE core deflator because we know the Fed looks at it. And people are trying to get a sense, is this Fed going to cut rates this year at all or not? So.
Major shout out. Ethan Harris, ex-Bank of America. Moynihan's in mourning. Moynihan's been wearing black just because Ethan Harris retired. He's been out on LinkedIn with brilliant notes. And Dr. Harris has a piercing note today about these inflation numbers matter.
Yep.
And how you look at them matter. And he's big on trim mean, taking the ugliness out, the big inflation, the little disinflation or deflation. And we'll talk about that as we go to 8:30 this morning. Tech earnings.
Wow, that was pretty
Sweeney,
solid.
Victory lap. Ruth Porritt, listen to the
she's
show.
So good.
Said, let's do what Paul Sweeney says.
Yes, she's so good. I mean, I'm putting up a dividend here for our good friends at Google, following what we saw from Facebook/Meta a quarter or two ago. So again, some of these tech companies, they have, as you've talked about it a million times, Tom, so much free cash flow.
They got to do something.
You're
right.
And they buy back stock.
Yeah.
They've paid down their debt. And they invest in their business. Why not pay a little
Here's
dividend?
the Bible. Daniel Paris on YouTube. You're looking at this right now with me. This is the Bible. It's a wicked thin book from Routledge. He was on 6 weeks ago. We're efforting Daniel Paris again. The ownership dividend. This is the new Bible from Paul Sweeney on just shut up and give a dividend. Doesn't have to be an EU dividend, but
why not?
A little bit of money back, pay some taxes, and move forward. Warning, I'm a little bit under the plague. It's been cold.
I mean, a little chilly this morning.
Don't you think, Lisa? I was thinking frost last night.
Yes. No
out at your summer place, I thought, up the river, I thought a little bit of frost. But I got the cough thing going, but I said, I'm still doing this. It's too big a day. We're in the Interactive Brokers studios with our Bloomberg Business Flash. Lisa Mateo.
You got it. And futures, they are advancing. Look, NASDAQ futures up nearly 1% right now. We have S&P futures up 0.7%, Dow futures up 0.1%. And this after blockbuster earnings. Microsoft, Alphabet topped Wall Street estimates with their latest quarterly results. A big part of that, fueled by their AI services. We have Microsoft up 4%, Alphabet up 11% right now. But it's really Snap shares, Google, that might be leading the tech rally. Snap shares up 24%.
Wow.
Social media company reported first quarter results beat estimates, gave this outlook that was stronger than predicted, so their shares are soaring this morning. On the flip side, you have Intel, though. Their shares tanking. They're down 7%. They gave a lackluster forecast for the period. And then from big tech, we go to big oil. We have Chevron. They're down 1%, even though it surpassed expectations for a second straight quarter. And then Exxon down nearly 2%. It posted disappointing results after a string of non-cash charges. Checking in with Brent crude right now, it's at $89 a barrel. And finally, the bond market, 2-year yield 4.99%. That's little change. The 10-year yield at 4.69%, down 1 basis point. That's your Bloomberg Business Flash. Tom and Paul.
Hey, Lisa, thanks so much. Now joining us really to start strong on this Friday, Francois Trahan joined us, just iconic on Wall Street, particularly New York Wall Street, with his work over the years, Trahan Macro Research. Francois, you're right where I am, which is the real interest rate matters. First, describe why the inflation-adjusted rate matters to our listeners and viewers. What's the big deal about a 10-year real rate at 2.26%?
Well, it's a proxy of monetary policy and how tight it is. It's, another version of the yield curve, if you will. And so there's always this debate at the end of a Fed tightening cycle as to whether policy is binding or not. I don't find that unusual, to be honest. It usually happens as we're waiting for those lag effects to start weighing on the economy. And so, I would say most proxies of policy argue that policy is tight.
So, Francois, I mean, policy is tight, but I mean, we're starting to hear some people out there talking about not only does this Fed not have to cut this year, but maybe even put a rate hike on the table. What do you think our Federal Reserve is going to do here? What should they do?
I think they should be forward-looking and cutting rates. When you say you're data dependent, you're basically admitting that you're only looking in the rearview mirror. And that's not a great place to be at a peak in the Fed funds rate, because typically it takes time, but typically those lag effects of monetary tightening eventually weigh on the economy, and you head into a slowdown, the earnings outlook starts to change, and a bear market ensues.
Yeah, we're going to talk the NFL draft in the entire 9 o'clock hour. For those of you, we've got some heavy lifting here for Global Wall Street with Francois Trahan. Okay, this is really important, Francois. So the basic idea is the real rate, which is back to a 2008 level, is way too elevated. You're saying the Fed has to cut rates. And then the other debate is we have nominal GDP where it is in a rate far too high relative to nominal GDP. Should they be cutting rates at the May 1 meeting just to get the process started?
Yeah, if you want it to be forward-looking, you should. Historically, the trigger for the Fed when inflation is not an issue, and it hasn't been in almost 40 years, is to look at the labor market stats. I would say most leading indicators of employment have turned at this point. And so telling you that as you get into the second half of the year, the unemployment rate starts to tick higher, I think that's really going to put the Fed to the test.
I can't.
I'm sorry, go
Paul,
ahead.
Just because of the time, I want Paul to jump in here. Paul, I can't emphasize enough the debate between Lindsay Piegza of Stifel and Francois Trahan of Trahan Macro Research. I mean, this is what it's about, folks. This is the debate.
Francois, can you explain to us that don't have gold bullion sitting in their closet, what is going on with gold these days?
Yeah, so gold it can be two things as an investment. It's either a hedge for inflation or it's a hedge for some sort of crisis. And it's sometimes hard to tell which is which, and at times they're both valid. Right now, the demand is largely coming out of China. And so I think China's economic woes are playing a big role in this. As you know, real estate has been the preferred form of savings in China. And since that's not working, well, gold becomes, a really good option.
So is it central bank buying out of China or is it consumers buying China? Because I've heard.
Yeah, the data shows that it's both, actually.
Okay. All right. So again, so where do we go from here with, let's just take, inflation hedges. How do we hedge inflation?
Well, it's, let me put this in context. Every
matters.
time you're at a peak in the Fed funds rate, usually when you look around, the economy feels pretty good. That's going to change, but the economy feels pretty good. Typically, inflation does hold up, core inflation we're talking about, so the form that the Fed cares about, for the very simple reason that it is a lagging economic indicator. In fact, the Conference Board has services CPI and its official lagging index. So there's a point in every cycle where leading indicators of growth start to do this, but inflation remains sticky and we start talking about stagflation. It doesn't mean we have stagflation, but I would say it's not unusual to talk about it at this stage of the cycle.
Is there a history where a central bank shifts from ex post methodology to ex ante courage?
Not in my career. I have not seen that.
That was a trick.
Francois
knows right where I'm going, folks, on this.
Yeah, no, I hear you. And I'm going to try to be as polite as I can. I would say in my career, the cycle where I saw the Fed be really proactive dates back almost 30 years, but it's the cycle in the mid-90s under Alan Greenspan. Other than that, they tend to be reactionary, and so they tend to be too tight, too long, too easy, too long. And a lot of that has to do with the fact that, they follow lagging indicators very closely.
This is brilliant. Paul, we can go on for another hour.
Sure.
Francois, really nice. We got to get you on again soon just to catch up with this, particularly after the 8:30 data. this morning. Francois Trahan, just brilliant. Again, folks, I want to say this. You're going to email in, send me the Trahan note. Send me Lisa Mateo's note. Send me Francois's note. We protect the copyright of all of our guests. Look to Trahan Macro Research for that brilliance as well. Speaking of brilliance, we're going to get to this after the news.
Okay, I'm ready.
Atlanta Falcons, bold. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump's lawyers are expected to continue their cross-examination of former National Enquirer publisher David Pecker this morning in Trump's hush money trial in New York. Pecker has spent 3 days on the witness stand in Donald Trump's criminal trial, explaining the National Enquirer's catch and kill operation to help the Trump campaign in the 2016 election. Meanwhile, the Supreme Court heard former President Trump's arguments for absolute immunity from prosecution as he faces charges in trying to overturn the 2020 election. Bloomberg's June Grasso reports.
For the first time, the Supreme Court considered presidential immunity from criminal prosecution. Donald Trump claims he has absolute immunity from prosecution over election interference. Though most of the justices were skeptical about Trump's claim of absolute presidential immunity, several of the conservative justices indicated they could limit when former presidents might be prosecuted, suggesting that the case might have to be sent back to lower courts before any trial could begin. In New York, June Grasso, Bloomberg Radio.
Secretary of State Antony Blinken met with President Xi Jinping in Beijing as the world's biggest economies spar on trade complaints and China's continued support for Russia. And there have been some challenging moments, as noted by President Xi, insisting the two countries should be partners, not rivals. He encouraged dialogue to manage differences. Blinken echoed that in his comments.
The United States is very clear-eyed about the challenges posed by the PRC and about our competing visions for the future. America will always defend our core interests and values.
Earlier, the top American diplomat held 5 hours of what the U.S. called constructive meetings with China's foreign minister. Finally, round one of the NFL draft in the books. Quarterback Caleb Williams selected number one overall by the Bears. Commanders, they took Heisman Trophy winner Jaden Daniels. Patriots, third quarterback off the board, Drake May at number 3. Global News, 24 hours a day. And whenever you want it, blah, 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 blah.
He's UNC, right? Drake May?
He is. Yeah, exactly.
Veronica Clark, she nailed that.
Did she?
Okay, you spend $180 million on a 35-year-old quarterback with an Achilles tendon. It's called the Green Bay model. And they're bringing in Michael Penix of Washington State to the Atlanta Falcons. Yeah. This stunned people. After spending $180 million on Mr. Cousins?
I didn't expect that. I'm not going to lie.
People are stunned.
I'm just like, what'd you do? I mean, look. Okay, I get what the Giants did. They got wide out. Malik Neighbors, they were 6th. I do not get the Falcons.
Can I ask a dumb question, Paul? Help me here. Is $180 million guaranteed to Mr. Cousins? Is it like baseball?
No, it's not. It's not. So the question is, how
years?
much is guaranteed? And I don't know his contract, but a big portion, more than half, is guaranteed. But it's not all guaranteed. To answer your question, that's a tough thing about being an NFL player. A, your career is very short, 3.5 years, and B, your contract's not guaranteed for the most part.
Mark Raimondi, on ESPN, giving us some good information here, and the answer is they called Cousins up in the middle of the draft and said, by the way, there's a new kid
in town
on the block. Futures up 40. It's a Sweeney moonshot. Google with a dividend. Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Interactive Brokers charges USD margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. All right, to the markets we go, where futures pointing to a higher open. We have NASDAQ futures up more than 1%. Dow futures up 0.1%. S&P futures up 0.7%. A big part of that thanks to the rally in tech stocks after stellar earnings expectations for cloud revenue from Microsoft, Alphabet. We have Microsoft up 4%, Alphabet up 12%. And with so much tech talk, we can't forget about economic data. Yes, today it's the Fed's preferred inflation gauge, the PCE deflator. We'll also get March government data on income and spending and a read on sentiment. So the bond market, the 2-year yield at 4.99%. That's little change. The 10-year yield at 4.69%, and that's down 1 basis point. Companies making news. We'll start with Tesla. They're up 1%. The National Highway Traffic Safety Administration, it's launching a new review over whether the company did enough to fix its autopilot system. And there's also been an update on that proposed takeover in the mining industry. Anglo American rejected BHP's $39 billion takeover proposal, saying that it significantly undervalues the company. With Anglo American, ADR's up 17%, BHP down 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, perfect there. Ed Ludlow, good morning. Bloomberg Technology. He's not out of bed yet. He's still, he's in the beauty sleep.
It's okay.
He's shut down the top of the, top of the hill.
No.
The bar that's at the top of the Intercontinental, the Mark Hopkins.
Yeah.
He's at the Mark Hopkins usually on Thursday.
I'm at Taddage Grill, Tom.
He's looking at the mist over the Golden Gate Bridge in tears. Ludlow's been killing it out on Twitter with real life Tesla driving.
I know.
It's like really valuable.
Yep.
I mean, I hate to say it, but I usually ignore the guy, but I really look at this.
He's killing it.
Really great. Okay, we're gonna I got like a 3-hour conversation here right now with Mandeep Singh, and Paul's got to do a victory lap here on the dividend. Mandeep, finally, I mean, I don't even know what with the puny dividend they're doing, what the dividend payout ratio is, but are finally the tech boys going to grow up and give us a dividend, and critically give us a dividend growth that somewhat correlates with their revenue growth?
Yeah, and look, I think Google and Amazon were the two out of the Mag 6 that didn't have...
The two children.
Yes, yeah. So it puts pressure on Amazon now to announce a dividend.
That's a good point, yeah.
So. And they're like lemmings off a cliff, Paul. You've been through this. I mean, Apple's got to one-up them and, do a 100 billion share buyback, whatever.
So, I mean, I'm looking at Google/Facebook, $80 billion in free cash flow. $70 billion, they announced this buyback, so that's huge.
Yeah.
Talk to us about the quarter, though. What did you see in the operations of the quarter? What stood out for you? Because the market really likes what it saw.
Yeah, I mean, look, everyone thought their search business is getting disrupted. They will, slow down in terms of growth rates. They come out and really blow it out of the park on the search profitability. I mean, that was the driver of why the operating margin was 32%. All-time high.
Wow.
And that just goes to show how much pricing power this company has. They can raise the ad auction prices without telling advertisers, and everyone will pay for it, because that's how their ROI is on ad spend. So clearly, they're flexing their muscle when it comes to ad pricing. And YouTube and cloud being a $100 billion run rate business combined, growing at over 25%.
That's Tom. That's Tom. He's been calling out YouTube for a while here. I'm not sure the street. Do you think the street fully appreciates YouTube?
No, they do not. I'll editorialize here. They do not.
Can I spin that out?
There was a dislocation in the valuation that Google had versus relative to Microsoft. Microsoft trading at 33 times PE versus Google at 23. Why?
Okay, the basic idea here is Apple peels off services. Dan Ives says no, they'll never do it. I don't know what that's worth. But Google could peel off or be forced to peel off YouTube, and it's ginormous. Is that the right, CFA term?
Yeah. I mean, their YouTube ad revenue grew 21%. The subscription revenue is also north of 20%. So
that's because of Bloomberg surveillance out on YouTube search. Bloomberg podcast continue.
And engagement is off the roof. So I agree. I think YouTube itself could be $1 trillion in market cap, given its growth rate.
So that puts Google, you'd model out at what, 3 trillion with a
I think so. Based on the numbers you saw last night.
Are they listening to Ruth? Come on. For New York City, there's a whole history here, folks. I believe it's Morgan Stanley. The brain freezes on a Friday. Ruth Porat's a CFO out there. They finally, the owners, the CEO, are they finally listening to Ruth?
I think so. I mean, she has additional responsibility now, in terms, and they are looking for a new CFO, given she has additional responsibility. But
I'm going to give Paul Sweeney a massive victory lap on this one. So I'm going to put it up again. I just put it out on social. This is the new world. This is the Sweeney world. Daniel Paris, pay a dividend. Yeah. They don't have to be like Total Europe or BNP Paribas. Just
exactly.
Pay something.
So, Mandeep, I still view AI as a threat to the core search business of Google. Is that a valid concern, do you think?
I mean, look, I could say the same about the cloud business for Microsoft. Yes, there is more competition, but in search, they are the incumbent player. And what they're showing right now is they can integrate their generative AI stuff with their cloud, with their search, and that actually is helping the business, the pricing power of the business.
You're right,
So,
take what you learned here. I mean, from Texas Instruments over to Meta, Facebook, over to the two yesterday. Bring it over to Apple. I believe it's on Tuesday.
well, so Apple, I think, has a different problem when it comes to the China side of the business, the 20% revenue exposure. You can't do anything about that handset revenue exposure they have. And the services side of the business is not going to look as good as, Microsoft and Google.
Does it threaten their margins?
It does. I mean, look, they have been in the antitrust crosshairs, even though, not much will happen in the near term, but the fact that they can't, keep their take rates at 30% they used to have in the App Store, that's going to hurt the business. And they can't roll out new Gen AI services because they don't have the infrastructure. I mean, all these companies are raising CapEx 30, 40, 50%. Apple doesn't spend as much on their data centers. And that's where I think they will be sort of they're behind, and it will be very hard for them to catch up in terms of the generative AI stuff, which is what the growth part of the business
Paul,
is.
do they need generative AI?
Well,
that's what I don't get.
Well, that's my question. I think they kind of do. So I was looking forward to this May 7th. I guess they have their big event coming up.
iPads.
Yeah. So
Lisa's buying 3.
What are we going to do? Are they going to have a, transformative announcement, do you think?
They will innovate with their chips. The biggest advantage that Apple has is it controls its chips in their devices. Okay. And that's where the on-device generative AI play is still there. No one else can take the distribution away from them. They control the distribution. And if they're able to show something like that, that will drive a heavy refresh cycle. But in the end, this company is still driven by iPhone refreshes and iMac refreshes and all those,
I had a fan stop me on the street, and they said, is it true that Mandeep and Anurag can't be in the same building at the same time? Is that true?
It's in the contract.
Like, have you ever talked to each other?
We get along very well.
But you can't be in the same building at the same time.
No, it's kind of like key man risk.
Okay.
We can't do it for our technology franchise.
Live chat, YouTube, Ed Ludlow. Hi, Tom. I overslept. Apologies. The alarm here on the West Coast is a little slow. What was the title of the book? Ed, The Ownership Dividend. Daniel Paris.
Nice.
We'll see. We have Ludlow slotted in for May sometime.
Yeah, maybe.
Third week of May.
Yep. That's okay.
Glad you're waking up, Ed. Tough life out there as well. Oh, it's up on. Sarah, did we get this? Okay,
yeah, there it is.
YouTube
There,
right
boom,
now.
look at that right up on the screen.
Oh, yeah.
Oh, look, they captured the image. Look at Sarah. That's why we're all going to be working for Sarah one day. I'm just telling you
vision
right
is,
now.
It's amazing. This was great. Let's do the sell right now. I mean, Apple CarPlay, thank you this weekend. Get it with the Bloomberg Business app. But Paul, the YouTube thing, and my answer is, all these fancy people like Mandeep, this.
I know.
It's what the customer wants.
Yep.
It's the audience speaking. Chad Hurley invented something. Google's taken it much further, obviously. But we see it anecdotally every day. This is what people have in their living room.
Yep, absolutely. It's what they have on their phone. It's what they have, in their car now. So it's just, Alphabet, and it's just an amazing investment in YouTube.
YouTube, search Bloomberg Podcast. Look for Lisa Mateo. That's the simplest way to get us. She's on the cover there with the chick. Big announcement Monday on YouTube. Look for that. I'll have an announcement Monday
about
YouTube and Bloomberg surveillance as well. Exciting Friday. We're 1 hour away from key inflation data. From New York City, Bloomberg surveillance.
Coming up, is there a bear case for the U.S. dollar? Jane Fuller is going to join us here, head of FX strategy at Rabobank. We'll talk all things currencies with inflation data coming. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the charge thanks to a big tech rally. We have NASDAQ futures up more than 1% right now. We'll check in with Microsoft. They're up 4%. We go over to Alphabet, up 12%, and Snap up 26% right now. As far as Dow futures, up 0.1%. S&P futures up 0.7%. To the bond market, the 2-year yield at 4.99%. Little change. The 10-year yield at 4.68%, and that is down 2 basis points. Now, we've been talking so much big tech. Let's get over to big oil. Chevron, those shares, they are down 0.7%, but it surpassed expectation that second straight quarter. You had strong oil production growth from recent acquisitions that really helped the company take advantage of crude prices that were above $80 a barrel. Exxon, they're down 1%. They posted disappointing results, but despite that earnings shortfall, well, cash flow higher than predicted, boosted by an uplift in Guyanese crude production. Speaking of crude, check in with those crude futures. Brent crude, $89 a barrel. That is your Bloomberg Business Flash.
She's just killing. I mean, Karen Moscow doesn't do Guyanese crude.
Oh my goodness, Guyanese.
Do I know where Guyana is on the map? Ken, did you survive bring your parent to work day? Did you survive it? You did. You barely survived it. Okay. Okay. The marriage
like
survived.
3 in the morning. I mean.
Yeah, it's great. What was great, folks? Take your kids to work day. I walked by and in one of our studios where they do odd lots, where Tracy Alloway and Joe Weisenthal record odd lots, and Barry Ritholtz does Masters in Business in there. They had like 10 cherubs in,
they're
hanging out at the mic.
Yep.
And the kids are sitting there with the Lisa Mateo script trying to do the data check.
Yep.
They were better than
You know what
Lisa.
they're doing, Tom? They were creating content. That's what
They
the
were
kids do. They
creating
create
content.
content.
Yeah.
That's what they do today.
And it was great. They said, "Who's the grandfather? Get rid of him."
Yeah.
Anyways, thank you to all of Bloomberg, particularly Bloomberg Events, for their work across 21,000. What was it, 21,000 employees?
I think we're more than that.
You know, I mean, Michael Barcel's a job, 21,000.
Yeah, that's a good
employees. Just a great event. Take your children to work day that we do here. I've been remiss, folks. I failed. And that we're really not covering the yen story. It's heated up Thursday, this Friday, into the weekend.
Wow,
and we're going to start a lifting coverage on yen, and we start strong with Jane Foley of Rabobank London. Jane, why should American listeners and viewers care about weak yen?
Well, that's a good question, because I think one of those questions related to that for the last few weeks is that, well, whose problem is this anyway? I mean,
whose
if you
is
look
it?
at, well, it's not necessarily the problem of the US. I mean, if you look, for instance, at the Bank of Indonesia, they were forced to hike interest rates just a couple of days ago to try and prevent their currency from falling too far. If you look at India, they've been intervening as well. Look at China, again, struggling to keep that their currency in line with that US dollar peg. And of course, that means that currencies such as the Chinese renminbi is at extremely strong levels against a currency like the Japanese yen. So there is a huge amount of problems related to the strong dollar, but it's probably not the problem of the US just yet.
It's Friday, but I'm going to go standard deviation on you. And Jane, I can bring up, folks, in the matter of typing, what's called JPY-CNY, which is yen renminbi.
Wow.
And it's stunning on a log basis, the velocity of strong yuan. I looked at Euro Yen, Jane Foley, which is a Rabobank concern, and we're out tip to tip over 5 standard deviations, so -2 to +3, whatever it is. It seems like it's getting out of control on a standard deviation basis. Do the institutions of Japan do they care about that out of control?
Oh, they definitely do. I mean, if we look at the jawboning, for instance, that we've seen from the Ministry of Finance in recent weeks, and I think that just goes to show, and we've seen some indications, some statements from them to suggest that, yes, there are benefits that come through from a weaker currency. The exporters, for instance, won't be minding this so much. But if you think about the companies in Japan that have to import food, they import oil, and those companies that only have a domestic consumer base or customer base, they're the ones that are going to be, beginning to struggle with this now. It's difficult to keep on passing on those higher import costs. So at this point, I think we've reached a level where they really don't want it to weaken too much further. But of course, everybody knows, everybody is of the view, well, look, the fundamentals, the interest rate differentials are still suggesting that the dollar is going to remain firm. And that's the real battle for the Ministry of Finance. It's very difficult to turn a currency around with foreign exchange intervention if the fundamentals are telling you a different story.
Well, I mean, Tom's the expert on the yen here. I can't even find it on my screen sometimes, but I do know it's at a 34-year low. What is the Bank of Japan thinking at the moment?
It's quite interesting because obviously we had that policy meeting from the Bank of Japan this morning. No one was expecting any change in rates because obviously they started that cycle off last month. But there were some hopes that there would be sort of a more hawkish tone. There were some hopes, for instance, that they may tweak their bond buying program, which they didn't do. So many people have said, well, look, this was a dovish central bank meeting. I don't think that's right. I don't think it was dovish. For instance, we had a statement in there suggesting that in the second half of their forecast projection period, underlying inflation would be at where they want it to be, at 2%. That's been their holy grail for decades. So we are achieving, or we are beginning to see what they want to see, which is inflation coming back to where they want it to be. That's fantastic for Japan. The problem is that it's been a slow process, and they certainly don't want to hike too fast and put themselves back at square one with inflation just being too low. And this is the difficulty. It just wasn't hawkish enough for the market.
Okay, and now, folks, Bloomberg Surveillance on a Friday, we go full nerd. Okay, Jane, let's go all Ica Green right now. How do they do intervention in a non-coordinated manner? There is no evidence from World War II that a unilateral intervention is efficacious. Is that true?
I think that's right. I mean, we can look back to the interventions of the 1990s, and really with those, you can say, well, look, dollar yen did turn around, but with hindsight, we can say, yeah, but you know what, the fundamentals were turning around at the same time, and we haven't really got that position yet. So what they really want to see is, are the Japanese economic data improving? And yeah, it slowly is. Or US data weakening so that the market thinks, oh, actually, the Fed can cut interest rates. And that is the problem. That's probably why they haven't intervened today. They're worried about the US data this afternoon. But if we were to see US inflation slowing down, that could mean that they could intervene and potentially get more bang for their buck.
Jane, it's been a busted experiment from day one, and now they're relying on the US to come to the rescue. I just don't get it. Let's go further nerdy here. Sweeney demands it. If they intervene, is it unsterilized, or are they so messed up they're going to do a full sterilized intervention, which means it has no effect on the system?
Well, this is, again, a very interesting question. Whatever they do, whenever they do it, they're going to try and get more bang for their buck. So this probably means that they may try and go for a time when market conditions are extremely thin. Maybe when most people have gone home. There's a couple of dates in early May when there's a Japanese public holiday. Maybe they would go for then, and they would look to have the biggest impact with the smallest spend, which means that some of these problems about sterilization that they could potentially run into would be lessened. But again, this is why they would probably like to choose a time when we've maybe had a US data release, which is slightly softer, or a Japanese data release, which is slightly stronger, so that they can perhaps limit the amount of money that they spend. But then again, it could be that the intervention only, if there is intervention, only has the impact of just slowing down the pace of deterioration in the value of the yen until the data turns.
One final question. And this goes back to the late Martin Feldstein in a lecture he gave me once in Washington. Has this experiment worked? Basically, with their odd economics of an island nation. I watched the last episode of Shogun last night, so I'm an expert on Japan. Jane Foley, is this experiment in reflation been successful for Japan?
Well, it's taken 30 years. But finally, they are getting to where they need to be, and so I would say, yes, it has in many respects, because they are finally reaching the target. But it's taken an awful lot of time, an awful lot of pain, and an awful lot of mistakes, I think, over the last 20 or so years.
This has been a clinic, folks. This has been a high level. Jane Foley, Rabobank, thank you so much. Look for this full interview out on our podcast. It'll get out there in the coming hours. Paul, that's what this is about.
Yeah.
I mean, you get adults like Jane Foley
she knows
who can
what she's
explain
doing.
What's going on. I look at it as a busted experiment, but I think we need to go to Tokyo. I talked to a head of our Japanese operations yesterday in terminal sales.
Yeah.
Norman said, when are you guys coming?
Yeah, we'll go there.
I can see Lisa there,
Yeah, absolutely.
We'll get her in a kimono. She can do the Shogun thing.
Yeah, they'd love us there.
It'd be great. I mean, you can Mateo-sama.
Yep,
That's
absolutely.
Mateo-sama. Futures up 35 with our news in New York City. Bar Sama.
See what I'm dealing with here, folks. Former National Enquirer publisher David Pecker returns to the witness stand today in former President Trump's so-called hush money and election interference case in New York. Yesterday, Pecker made a stunning new allegation that he engaged with White House staffers Hope Hicks and Sarah Huckabee Sanders. Meanwhile, immunity for Trump and all future presidents is now before the Supreme Court. Bloomberg's Ed Baxter has the story.
The justices expressed skepticism towards sweeping immunity, but did say there may be a place for some kind of protection. Justice Samuel Alito asked, without immunity, would presidents be able to act?
After leaving office is not that the president is going to be able to go off into a peaceful retirement, but that the president may be criminally prosecuted.
But Justice Ketanji Brown Jackson said if there is no potential liability,
wouldn't there be a significant risk that future presidents would be emboldened to commit crimes with abandon while they're in office?
Justice Sonia Sotomayor brought it back more specifically to Trump.
This is what you're asking us to say. A president is entitled for total personal gain.
The justices seem to say this may not be done so that his D.C. trial could start before the election. Ed Baxter, Bloomberg Radio.
Secretary of State Antony Blinken is on a diplomatic tour that included stops in Shanghai and Beijing. Following his meeting today with Chinese President Xi Jinping, Blinken said they were expanding their collaboration to include artificial intelligence.
I'm pleased to announce that earlier today, we agreed to hold the first U.S. PRC talks on artificial intelligence to be held in the coming weeks. We'll share our respective views on the risks and safety concerns around advanced AI and how best to manage them.
Secretary Blinken. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, what did we learn from tech this week? I think you really nailed it, and I thought Mandeep really brought it back. I stood with Arthur Levitt in our old building the day Google went public.
Really? Okay.
And he and I were trying to figure out a valuation, literally, I kid you not, in the back of an envelope.
Yeah.
And from that moment forward, not Chairman Levitt, but others, this is it for search. It's done. It's done.
Yeah.
I've heard it 47 times.
Yeah.
It's
and
done.
we've been saying, 10 years ago, we've been seeing double-digit growth out of some of these big tech companies every single quarter. They are delivering on the top line. By and large, they're delivering on the margins and profits. And what you call out, Tom, is the free cash flow is just extraordinary. You think about some of the free cash flow coming out of these companies, and what do they do with the free cash flow? And they're spending a lot in R&D. It's not like they're skimping. They're spending a ton of money on R&D. But what do they do with the free cash flow? They've been generally buying back stock. Now we're starting to see with Meta and now with Google some token dividends. And I think that's the right move because if nothing else, it opens you up to a whole nother investor base.
Critically, we don't have time for this, but it's important. Dividend growth is more important than the level of the present dividend. Do you believe
so
that?
at least in line with earnings growth. And that's typically how most companies will phrase their policy.
These guys can do double digit. They can change it.
I know.
They can go single digit if the plan stumbles.
Yep.
I think you're onto something.
Amazon, as Mandeep called out, let's get a dividend out of Amazon maybe.
Daniel Paris is hard to get. We're going to get him on here again. He was on a couple weeks ago. The Ownership Dividend's a great book. I put it out on social. Daniel Paris, soon. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a higher open. NASDAQ futures up 1%. Dow futures up 0.1%. S&P futures up 0.7%. To the bond market, the 2-year yield at 4.99%. That's little change. The yield on the 10-year at 4.68%, down 2 basis points. To commodities we go. Spot gold higher at $2,345 an ounce. Brent crude $89 a barrel. NYMEX crude $84 a barrel. A few companies making news. We'll start with Amazon. Their shares up nearly 3%. The FTC says Jeff Bezos and Amazon CEO Andy Jassy, they're being accused of erasing chats that are discussing business. And this as the agency starts to make an investigation. Amazon, though, denies those claims. And as the artificial intelligence boom gains strength, so does fundraising round for Elon Musk's XAI. Sources are saying it's nearing a deal to raise $6 billion in a funding round that would value the startup at $18 billion. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. I mean, Paul, there's some headlines out here, but is this the weekend where Paramount CBS is put out of their misery?
I don't know, Tom. That's a good
question.
We're
waiting for Japanese yen.
Yes,
Why don't they,
exactly.
fly to Tokyo, take cocktails at the Imperial Hotel, and do a deal.
I just don't know what's going to happen there, Tom. You got that control shareholder, Sherry Redstone, Subna Redstone's daughter. She's obviously said that she will sell her control stake, and maybe that'll get the ball rolling. But there's just no natural buyer out there, Tom.
I mean, I looked at Warner Brothers Digital bid down. Right now, I got Paramount 12.18, indicating 11.86. That gets it right down on some moving average. I just, what are we waiting for?
I don't know, Tom. And this thing used to be one of the 2 or 3 jewels in the media space in Hollywood, the studio. I don't know.
I've watched the end of Shogun last night. I'm going to give it away because I know people
and you're a big fan, right? I mean, you're
I've read the book twice, and I've read all the other books. King Rat should be a required read for every smart mouth 16-year-old in America. But the bottom line is, I'm watching this thing, and it's shot near Vancouver, and just the clouds. I'm sure it's all computers and that. But what did that cost? And I'm paying, what, $7, $47 a month? I don't get it. I just
neither do investors.
I don't get it.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages is brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Lisa, what do you have?
All right, college students, this is in the Times, are becoming reservation scalpers. It's a new side hustle that they're thought of. What? Because in New York City, people are always wanting to get reservations to these high-end restaurants. You can't get in. So what these students are doing is they're making reservations. They're posting them on this platform called Appointment Trader. That's a platform where people bid on reservations. So they're booking these reservations. There's one college student in Rhode Island who booked a reservation for a French restaurant in Soho. He made $855 just from someone who wanted to get in there. He made $1,000 from a reservation at Carbone because someone wanted to get in there. Really? He said he made $70,000 a year on this side hustle. New Yorkers don't like it. They say it's ruining the restaurant industry because we're New Yorkers. We want to get into different, places, and we can't because these kids are buying up all the reservations. They're not even going. They're just making money off of it.
What happened to the days when you just walk in and slide the person at the counter $20 and say, just come on now?
Exactly. You go into Carbone. They go, oh my God, it's you. I'm flattered. And you go up the stairs to the back little bar in the back.
Look at you.
And you sit on a little chair, and your children are like, this is so cool. And there's the bar right there with the mirror.
Okay.
And you give them $50 or whatever.
Call it a day.
And now it's $800.
Sometimes $1,000. Justin Bieber couldn't even get into Carbone.
It's just ridiculous.
So and the restaurants don't like it because if those reservations aren't sold, then they're stuck with empty tables, and that's when they just lose out that way.
Yeah, I've not been there, so I'll defer to Tom.
Restaurant scalpers.
Smith and Walensky's last night.
Oh,
New York Strip, top.
There
Oh,
you
listen,
go.
over on 3rd Avenue?
Yep, fantastic. Packed.
You are so old school.
This is my investment banking team from 1986. We still get together.
My God.
Yeah.
They let you bring in the drips and the catheters and the walkers.
Exactly.
Did you have to pay for that reservation? Or
We know some people.
We're mentioning
There you
restaurants.
go.
Afterthought had a birthday. Where do you want to go? She goes, the Mermaid. So there's a new Mermaid down in Soho. It's the first time I've been below 59th Street in like
why
8
would you?
months. You know.
Nice.
I texted Pharaoh. I said, come on over. I'm at the Mermaid. And he was in Capri or something.
Yeah, of course, exactly.
What do you got?
Brushed you off. Another thing in New Yorkers that they always talk about, is congestion pricing. This one is the illegal weed shops. That's another issue in New York City.
I've heard this.
It turns out, that this is from the New York Times. An illegal shop in Queens is called Bodega. Just received a permit. And this is kind of a backtrack because New York said they were cracking down on these illegal weed shops and not going to give them permits because they weren't going about it the legal way. But now the New York Times is saying, hey, this shop is starting to do it. The State Office of Cannabis Management, there is such a thing. It said that it's investigating whether the owners, because they applied for it under a different name, so that might be an issue, and that's why they may have gotten up there. But it's still under review.
Right.
But this is just a big issue.
New York
There's
City has
thousands
screwed this up terribly. Every single block has the illegal weed shops.
People are bitter.
And where's the tax revenue? I mean, you talk to people in the cannabis industry, and they say New York City is the absolute worst execution of this law they've seen anywhere.
My basic take is it's Boulder, Colorado.
Yep.
Yeah.
Spring of 1971, and the music isn't as good. And it's out of control. I mean, that's what I hear from, particularly downtown.
Well, I hear
It's
that
just
from
out
Matt
of
Miller.
control.
I mean, he's my go-to guy on, the
Oh
weed
yeah,
shops.
this is a problem. He's in one of the suburbs north of the city.
Yes.
It's a big problem.
Exactly.
Right? Yeah.
So anyway, all right. Well,
Next.
All right, what's also out of control? Tipping, tipflation.
Oh, don't
okay?
get me going.
There's a study. It's from Tucker Research. This is what's in the New York Post. Your favorite, Paul.
Yep.
Americans spend nearly $500 a year tipping more than they'd like to because they're saying they feel a lot of pressure. You're at the Starbucks or whatever. The barista turns a little, tablet around, and they're staring at you as you pick 10%, 15%, 20%, or nothing.
Yeah.
It's the
I
pressure.
am now. This is one of my New Year's resolutions. Just starting today.
Okay.
If I didn't do it 5 years ago, I'm not doing it today.
Well, that's another
my
one
thing.
of the points. Yeah.
Because I'm a good tipper. You ask any of the folks down the Jersey Shore saloons, they know I'm a good tipper. But I'm not.
Now, Tucker, on the other hand.
Oh, my goodness. Yeah, exactly. Exactly.
But that's the problem. People are saying they're tipping now for things that they never tipped before.
There's a good. I saw on social
and I
media.
get stares. I get stares.
You get
I
stares?
Get nasty
You get
looks.
stared at?
A good thing on social media I saw yesterday was somebody was going through TSA. They were going through and a person was going through their TSA,
Right.
tearing
You
apart
want
the
a
thing,
tip?
and then afterwards they put their phone next to them for the tip. So
Are you done, or do you have one more jewel?
No. Okay, your latte could be getting more expensive. Here's the reason why. There's a
Cocoa
drought in
prices.
Vietnam. Yes, hurting coffee bean production. We're talking about robust
This is real.
futures. Hit a 16-year high on Wednesday. Here's the issue that I thought was interesting. Hoarding. Vietnamese farmers, they're holding on to the beans. They're holding on to as much as 13% of this year's harvest. They're hoping to sell them for higher prices.
Good trade.
So that's becoming the issue there. So experts saying, it could take a while before it reaches consumers. So your mocha is safe for now, but it could start to tick up.
Tom, we have a ticker on that on the Bloomberg Terminal CCN4 space commodity cocoa futures. Again, it's just been this chart has gone up and to the right like crazy. Spike in cocoa prices. Go figure. I mean, that's commodity inflation that hits your pocketbook.
Lisa, thank you so much. Greatly appreciate it this morning. The tipping thing is a huge deal because, in Paris it's totally different where they get a huge wage, and here they don't.
Right.
And London is really messed up where there's no tipping. London's the worst.
So you don't tip in London?
You don't tip in London.
You cannot. If you don't leave cash, they don't get tipped. It's terrible. It's a complete scam in London.
But it's part of the culture. I mean,
But they get paid more than.
They do get paid more, but you can't add a tip off your card.
You don't even get that option.
I sat down with Redo, keeper of the Amex, and we spent an hour on this. That was a joke. Lisa, that was brilliant. Very valuable, actually. It's Friday. We're staggering there. You need to stay with us. 35 minutes from now, The Cure and you will be looking at inflation.
I don't care if Monday's blue, Tuesday's you, it's Friday, I'm in love. Monday you can fall apart. Tuesday, Wednesday break my heart. Oh, Thursday doesn't even start. It's Friday, I'm in love.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Bloomberg Surveillance, 29 minutes away from a key inflation report. Good morning to everyone with the Federal Reserve System nationwide tuning in. We'll try to give you some inflation covers there to help the PhDs remodel the model. That's what they're going to be doing today. There's so many things going on. We took Paramount, what they're going to do this weekend. Jane Foley, I'm sorry, that was a clinic.
Great.
Yeah.
She's the best.
I mean, you like how I did sterilized and unsterilized
Yes,
there?
I wasn't sure where you're going with that, but it works.
I'm doing
It
an
works.
IMF panel. I have no idea what I'm talking about, but I say, sterilized, unsterilized, and Christine Lagarde goes, oh. Something like that. We're going to watch again this weekend. Stay tuned to Bloomberg Radio worldwide Sunday evening. We will have complete coverage of the choice set, as they say, that the Japanese institutions, BOJ and the Ministry of Finance have as well. I'm getting organized here on a Friday. Again, 29 minutes away from a big inflation report on Apple CarPlay, on YouTube. Good morning, search Bloomberg Podcasts, Bloomberg Surveillance, and we're brought to you by Cohn Resnick, Advisory Assurance Tax. Cohn Resnick, they can help your business quantify its financial exposure using risk-based strategies and analytics. Visit cohnresnick.com. Paul, you're going to love this. Duke basketball, Matthew Christensen, a few years ago.
Yeah.
Tough kid out of Belmont, Boston. And he had a father who changed what we talk about. And we're going to talk about that in a moment with Nick Colas. We'll get to that. We're going to do Duke basketball and a little disruption. First, we disrupt you with the Bloomberg Business Flash. Here's Lisa Mateo.
You got it. And futures advancing. Right now we have NASDAQ futures up nearly 1%. S&P futures up 0.7%. Dow futures up 0.1%. This after blockbuster earnings from Microsoft, Alphabet topped Wall Street estimates with their latest quarterly results. A big part of that, yes, their use of AI services. Microsoft up 4%. Alphabet up 11%. But it's really Snap shares leading the tech rally. They're up 23%. The social media company had first quarter results beat estimates, also gave an outlook that was stronger than expected. Then on the flip side, you have Intel shares tanking down 8%. The company gave a lackluster forecast for the period. And then we go from big tech to big oil. We have Chevron surpassed expectations for a second straight quarter, but shares are down about 0.5% right now. Exxon down 1.5%. Disappointing results after a string of non-cash charges. That is your Bloomberg Business Flash. Tom and Paul.
So to continue, Lisa, thanks so much. I mean, Matt Christensen's at Duke.
Yep.
And he's in the game. He's out of Belmont, civil engineering and economics major. He's sliding through. His father was a Rhodes Scholar and played basketball at BYU. His name was Clay Christensen. And he changed how we think. And there's no one better to talk about this right now than Nick Colas. We're thrilled he could join us from Data Trek today. Nick, I love your paragraphs in your note today on disruption. Clayton Christensen handed us disruption. What's the character of the disruption going into the summer of 2024?
Well, I'll tell you, people think of disruption as anything that's just cool and neat and new, but it's not really that way. Disruption is always about the low end, what's happening at the low end of a market. So as we think about, say, electric vehicles, the big story in electric vehicles is the low end of the market. How do you make a car under $25,000? Elon Musk talked about that just this week. Critical topic. The other issue, say in AI is disrupting all kinds of lower end activity. These are not menial jobs, menial work, but they're work that can be done by a computer. So what happens in disruption always starts at the low end. Think Japanese cars in the 70s. Think Nucor with steel. It always begins at the low end. That's what makes it special. That's what makes it disruptive.
And Paul, it's so important here is you know how much I hate all the sexy Apple videos of the new products. The disruption is in the chips. In Chris Miller's essay in the FT in the last 2 days, my book of the summer on chip wars, talks about that low-end disruption.
Yeah, exactly. And it's interesting, Nick. I mean, talking about disruption, we've had a couple of the tech companies report this week. This AI thing is real. How do you think about it as an investment opportunity? It was certainly a market theme in 2023, but you see these tech companies' earnings, and it is all over the place.
It is. I mean, I think about it in two ways. The first is what's it doing for the tech companies themselves? What are the pick and shovel makers getting out of it? And they're clearly, for the most part, getting a lot out of it. But the bigger issue is going to be how much it affects societal productivity, labor force productivity over the next couple of years, because that's our chance to have a much better economic outcome in this country by getting better GDP growth than just the growth in labor markets. So I'm looking at what's happening with the companies. By and large, they're succeeding with it. By and large, they're making more money with it. I mean, Google's paying a dividend now. Who would have thought?
Yeah.
The next step is going to be, what does it do for labor productivity overall? That'll be a 25, 26, 27 story.
All right. So let's step back, Nick. I mean, we're going to get a big inflation print today. We started the year, 6 rate cuts maybe for this Federal Reserve. Now we're down to less than 2 is what the market's kind of discounting. How do you see the Fed's position right here?
Oh, look, I mean, let's all sort of face up to the facts. The Fed is probably not cutting rates this year. Inflation is just way too high. You can't get inflation down to 2% without a recession if you're going to want that in the next 12 to 18 months. And that recession is not going to happen given labor market strength. So I think we have to give up on rate cuts, give up on that hope, and just look at corporate earnings as the driver of stocks. I think that's the basic message.
So, all right, I mean, we're in earnings season right now. What are you looking for in terms of, what corporate America is telling us about their economy here?
Driver of stocks. What did we get? 15% revenue growth yesterday?
Exactly. How about that? I can do that.
That's like 4 years of a toothpaste company in 1 quarter.
What are you seeing in earnings here, Nick?
The interesting thing about the quarter is all the earnings growth in the S&P is coming from big tech. Without big tech, S&P earnings growth is negative 6%. Now, it could end up being 0 if they all surprise as they should. But this quarter has been all about big tech. The magic of the next couple of quarters is going to have to be improving year-over-year earnings for the rest of the S&P, the S&P 495. The market says it'll happen. We've seen many groups rally, like industrials and financials, but they have to come through with the numbers.
All right, so as you think about it here, Nick, I mean, Tom's been all in these Magnificent Seven. He's just been clipping coupons for the last couple of years. How about the rest of us here? Where do we find opportunities in this market here where I'm not sure where the Fed's going to go here, and I think I've got some decent earnings tailwinds. Where do I go?
History says this is a mid-cycle market. We haven't had a recession. We're not looking for a recession. Obviously, things still look pretty good. So you play other sectors on top of tech. Tech is fine, but financials, a good sector. Industrials, a good sector. And importantly, it's big cap over small cap and big U.S. over non-U.S. That's the classic playbook. This works back to the 1970s, and it's working again now.
You're saying buy the banks?
But banks are a tougher call. I'd say financials, the classic S&P financials.
Yeah.
Visa and MasterCard, but also the money managers, even some of the better, smaller brokers.
Okay.
The banks are just tough because commercial real estate.
Nick, Katie from outside Philadelphia, she's taking a triple major at Haverford.
Yeah.
That's what you do at Haverford. I mean, you take Nick, you went to Haverford. I want you to explain to our audience, and this guy's world-class folks in, what we do in economics, concept, Euclidean geometry, algebra, differential equations. Nick, explain the value of a liberal arts education to a STEM-mad America.
Sure. I mean, look, nothing wrong with STEM. Let's just put that out there right now. But liberal arts majors force you to learn how to do 2 things. The first one is you learn how to write. You learn how to put your thoughts down on paper in a way that's organized so that other people can read it and understand what you're saying. And then secondly, it gives you a real appreciation for the scope of the human experience, whether that be in history or philosophy, any of those disciplines. It gives you a much wider scope and understanding of what it is to be human. And that's why they call it humanities.
Nicholas, thank you so much. Always look forward to doing a remote with you and Katie from Haverford here, outside Philadelphia.
Awesome schools.
That's just the Sixers speak the
Haverford,
Knicks.
Swarthmore, amazing schools out there, small liberal arts schools.
Katie taking a triple major at Haverford. That's like work.
Plus, she's like a crazy horse person.
Well, no, that's one of the majors.
Yeah, it's one of the majors. Okay. And Gus, shout out to Gus, her horse these days.
Yeah, Catherine Greifeld, good morning as well from Haverford as well. That was brilliant with Nick Colas. Futures lift up 35, 20 minutes from the inflation report. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The anti-war protests and arrests at Columbia University are leading to more campus-based student protests across the country. Bloomberg's Amy Morris reports.
The University of Southern California canceled its main commencement ceremony, citing safety concerns. Other schools have rewritten their rules to ban encampments and moved final exams to new locations. This after hundreds of students on campuses across the country have been arrested as they take part in a nationwide movement from Columbia to Harvard, Berkeley, New York University, Yale, North Carolina, Illinois, Texas, George Washington University, and American University. The students are demanding schools cut financial ties to Israel and divest from companies enabling the conflict. They also want universities to drop charges against pro-Palestinian student organizers. In Washington, Amy Morris, Bloomberg Radio.
The U.S. Supreme Court is mulling over the issue of absolute presidential immunity after hearing arguments involving Donald Trump's efforts to subvert the results of the 2020 election. Today in New York, there will be more testimony from veteran publisher David Pecker in Trump's hush money trial. Secretary of State Antony Blinken has met with Chinese President Xi Jinping and senior Chinese officials in Beijing. They warned of the dangers of misunderstandings as the U.S. and China butted heads over a number of contentious bilateral, regional, and global issues. Talks between the two sides have increased in recent months, even as the differences have grown. Today, Blinken raised concerns with Xi about China's support for Russia and its invasion of Ukraine, as well as other issues like the production and export of synthetic opioid precursors.
In my discussions, I underscored the importance of the PRC taking additional action, in particular by prosecuting those who were selling chemicals and equipment used to make fentanyl.
Secretary Blinken says other topics included Taiwan and human rights. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Bard. This is Bloomberg. Tom, Paul, Lisa.
Roosevelt Brown, 1950s all-decade team, New York Giants, Hall of Fame, 9-time Pro Bowler, lowest draft pick in history of the NFL to be in the Hall of Fame. He was drafted number 321 overall. Roosevelt Brown, New York Giants.
Didn't know that.
Back with the 1956
Where does someone find
New York
that
Giants, which is almost as far back as the last time the Lions won. Do we care about the lower rounds of the draft?
No, I mean, think of Rocky Bleier. Remember him?
Yeah.
I mean,
he's wonderful.
Yeah, he was
Pittsburgh.
great. Yeah. And, he had a TV movie made after him. And, he was way low. I don't even think he was drafted. Yeah, and that's, it's a hit and miss.
And the thing is, there's now 17 games. Guys get hurt all the time. So you have to literally take guys off the street. And then they're starting in the NFL 2 days later.
Right.
So, I mean, anybody, anywhere from any round can have a career in the NFL if they can stay healthy. That's the way I think about it. I mean,
Is the draft still going on today?
Oh, yeah.
Two
We
more
got,
days,
we got
two more rounds,
I
I
mean,
guess. I don't know how it works.
The Tigers are away, I think. I mean, you can't even go to the draft and then take in the Tigers.
Yeah, but Hart Plaza's rocking. Oh my goodness!
It looked great on TV.
It did.
I mean, you guys there were a ton of people there.
Oh yeah.
I mean, so they've
that
taken,
new enclosure looks great.
Yeah. So the NFL's done a great job taking this thing on the road.
Oh,
It used to be in New York.
Where are the
New York
others?
every year. Now it's everywhere.
Yeah,
So it's great.
It's going to be great.
Yeah.
Bloomberg Business of Sports with Scarlet Food, Damian Sassar, Michael Barr leading the way there. Look for that this weekend. Futures up 38. It is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a higher opening. We have S&P futures up 0.7%, Dow futures up 0.1%, but NASDAQ futures leading the way up more than 1% right now. That's thanks to a rally in tech stocks, stellar earnings and expectations for cloud revenue from Microsoft and Alphabet. Microsoft up 4%, Alphabet up 11%. Snap getting the biggest tech lift this morning, up 23%. So much tech talk, we can't forget about economic data. In under 15 minutes, we'll get the Fed's preferred inflation gauge, yes, the PCE deflator, March government data on income and spending, and then at 10 a.m. Wall Street time, we'll get a read on sentiment. Over to the bond market, the 2-year yield at 5.5%. That is little change. The 10-year yield at 4.68%, and that is down 2 basis points. More earnings coming in. We have AbbVie up 0.7%, lifted its full-year profit guidance, newer anti-inflammatory treatments that kind of made up for its Humira losses. And then you have consumer giants Colgate-Palmolive up 1.5%. First quarter earnings beat, and the company raised its guidance. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul Sweeney and Tom Keene here again as yesterday. Key economic data. We'll see that in 12, 13 minutes here. Who do we have again, Eric, here? Line me up. We got Neil Dutta afterwards, right? Neil Dutta.
That's good.
Okay, Bjorn. Well, I know we have Bjorn Van Roy here, but we're going to...
Neil Dutta right at the bottom of the hour with the data. That'll be good.
Yeah, we're gonna, at the bottom.
Dawson.
Cam Dawson's going to be through on the equity markets as well. Every shop has somebody with prodigious modeling shops. They're usually not in financial media. And we are thrilled that our global economics team has a massive goat out of Madrid. He's Bjorn Van Roy. He's out of Humboldt in Germany, which for those in the economics bracket is a really prestigious piece of parchment. But he's prodigious in modeling chops globally and economics. We have him today on inflation, on the U.S., but just on the state of belief in economics. Jordan, thank you so much for joining right now. Which is the most interesting second derivative for you right now? Which time series, which economic indicator is the most fascinating in terms of an acceleration or deceleration?
Yeah, thanks a lot, Tom, for having me on your show. I follow that quite a lot, so I'm really pleased to be on this show. Yeah, as you mentioned, we have a modeling team, and we look at high frequency data. In particular, the most important data we look at is alternative to high frequency data on labor markets to see how hot the labor market continues. So we have nowcasting models for non-farm payrolls, but we also have nowcasting models for the price releases. And when we look at the high frequency data on inflation recently, one remarkable thing is that everybody has been quite surprised on the upside, and that persistently so. So we have looked at high frequency indicators, as I mentioned, and computed economic data surprise indicators. So with every price release on home prices, on hourly earnings, on business prices, but also the CPI days and PCE days, you have seen that markets and economists have persistently been surprised to the upside. And what does that mean for today's release on the PCE? There's again the risk that market will underestimate the price dynamics in the PCE, and that even leads to a higher print in the PCE index.
Are the dynamics of service sector traditional or normal to goods sector? Are we back to pre-pandemic normal in the dynamics between those two large parts of inflation?
Yeah, I think the service sector inflation is really what we have to focus on, because we see disinflationary trends in the goods market, in particular with respect to the global situation. So when you think about China, so we have some disinflationary dynamics coming from outside the U.S., also from the euro area. But on the service sector, this is like really related to the hot labor market that we have that also has persistently surprised on the upside. And our models basically show that this is exactly the element of inflation where we have to look at.
Bjorn, we've seen here in the U.S. over the last, I guess, 3 months or so, kind of a resurgence, if you will, or an easing of the decline in inflation. Is that a blip, or are we seeing a fundamental resurgence of inflation here in the U.S.?
There's certainly a risk that the underlying dynamics on the labor market is stronger than most expect. And also when you look at commodity markets, so we see this rebound with all the geopolitical developments in the Middle East, but also in other places, that we will see another surge in commodity prices, and that will directly trickle down again to the goods price inflation and services inflation. So we are, I think, in a decisive point if we get into a round of the next run of inflation. And our models take these developments into account, and they flag a substantial upside risk to inflation for the remainder of the year.
I've got one more question, John, as we go towards 8:30, and this is this. Can I do an audible with him?
Sure.
Guy's so competent, I can do an audible.
Yeah.
I've asked this of prime ministers. I've asked this of Madame Lagarde. I think off camera, off microphone. But I got to ask you, John, is Europe beyond Eurosclerosis? Is Europe innovating, or is there a vibrancy or a nominal GDP that gets them beyond Japanification?
Yeah, that's a very good question. I mean, one risk we see is that we may have another situation of fragmentation of the euro area, in particular with the debt sustainability issues in Italy, and as well as an industrial crisis in Germany. So for the ECB, we certainly see a much more dovish tone than for the Fed, and we may be at the beginning of a divergence of monetary policy trends. So in our view, and this would mean like a weakness for the euro, which would complicate the things for the ECB again on the inflation side. So we are also in Europe in a decisive point where we go for the future for the euro area.
John, thank you so much. John Van Roy from Madrid. He is our best at economic modeling. Here, 7 minutes away, 6 minutes away from the inflation report. Equity markets have detached. This is a Sweeney effect, the Google dividend. Sure. Futures up 36, Dow futures up only 51 points. NASDAQ sprightly 0.9%. NASDAQ getting up near 18,000 again, which shocks
those round
me.
Numbers, yeah.
The VIX, I mean, it says it all. 19, panic. 2 cups of coffee ago, and now we're at 15.64. So here's what we're going to do. We got Neil Dutta coming up, and Cam Dawson is going to help us out on the equity markets. And we should get Mohammed on because QPR is playing leads.
I know.
That's a basic thing you can't forget about it. Nothing matters this weekend except Aston Villa, Chelsea. I mean, come on, Ira. It's the only team that they can easily beat. I mean, Chelsea's struggling so bad. This is a layup for Aston Villa, right?
Well, we need the 3 points to solidify our Champions League spot for sure. And keep in mind, though, Aston Villa has a tough schedule ahead. We're the only English team left in Europe, so we're playing in the Conference League semifinals. All the other English teams have been knocked out of European competition.
Could you imagine Major League Baseball where they're in 2 other leagues as well?
I have no idea.
I have no idea what he's talking about.
What's going on.
Where's Pharaoh to translate what he just said? Ira, translate for us the importance of this report in 5 minutes after what we saw yesterday.
Yeah, so the details is what we're going to be looking at, right? Because when you get the quarterly GDP report, you don't necessarily see all of the monthly kind of shorter term trends, but there's also some detail, particularly in the spending data that we'll be concentrating on. So things like real spending patterns in both services and the goods sector, because the GDP report yesterday did show that the goods sector had a significant weakness in the first quarter, and we want to see some of the details as to where that is. On the inflation data, it'll be interesting to see if there's revisions that caused the higher than expected inflation numbers, or if it was all in March. And if it was all in March, that actually doesn't bode well for the path of the Federal Reserve, because it's more likely, almost regardless anyway, it's more likely that the Federal Reserve is going to stay on hold as opposed to cut interest rates early.
So does that imply, I guess, Ira, that the Fed looks at this inflation data that we've seen over the past few months, that we'll get another read in a couple of minutes, that this is something more than a CFA level blip?
Well, so it's not that inflation is necessarily accelerating, right? We have to keep things in mind. It's just not decelerating anymore. So it's not like you're going back and seeing 5%, 6% inflation prints on a year-on-year basis. It's just that we're hovering kind of between 3 and 4%, as opposed to continuing to fall further into, to 2.5%, then to 2%. So it's more the pace of gains. And this stabilization isn't completely shocking. In fact, it's something that we've been highlighting for the last 6 months or so, that with services so strong and robust and people still willing to spend, that it's going to be difficult for inflation to fall much below 3% unless you get services inflation down a lot. And that doesn't seem likely given the strength of the labor market and the wage gains you've been seeing.
Inflation report in 3 minutes to all of you across this nation, worldwide, on Apple CarPlay, Android Play, on YouTube. Search Bloomberg Podcast. Look for Lisa Mateo. It's a little white chiclet with her gorgeosity on it. Click on that, and you get us live with a live chat. It's been very, very successful. Paul, why don't you slip in one more here to Mr. Jersey?
So, Ira, I guess the question is, what do you think the market's pricing in here? I mean, I've kind of lost my, confidence in the warp, at least temporarily here. But when you talk to investors out there, what do they think is going to happen here when rates over the next 3 to 6 months?
Yeah, so people are concerned that not only will the Fed not cut interest rates 3 times or more this year, the dots still show 3 times that they think that they're going to cut rates, but more that they might remain on hold and not actually start any cutting cycle for a while. And I think that's a growing, I don't want to say it's consensus yet, but there's certainly a growing investor base that believes that. And you've seen this in some derivatives markets. So when you look at options and short-term interest rate futures, you see that people are buying puts on those futures, implying that they're thinking maybe even the Federal Reserve next move might even be an interest rate hike. So when you model out all the probabilities, we actually are pricing for some relatively small but non-trivial chance that the Federal Reserve will increase interest rates. And there's a growing a base of people who think that, hey, maybe the Fed's going to be on hold for the rest of the year. And that's actually almost equal probability now of the Fed either remaining on hold or actually cutting. So that's a massive shift that you've seen over the last couple of months.
Our Jersey, stay with us. We're 1 minute away from this report. We'll have Mr. Jersey with market reaction. He used to go off to his fan base and all.
Oh, I know.
Princeton,
Yep,
thousands of people waiting. We'll have Ira Jersey with us. Then Neil Dutta, Cam Dawson to come by on equities. The futures up 33. To frame it out, the Sweeney statistic, the 2-year yield 5.01%, 10-year 4.68%, the real yield 2.25%. And there's a wide swath of data here: personal income, personal spending, inflation-adjusted personal spending, and of course the anticipated PCE deflator. It comes in 4 flavors. It's like Howard Johnson's. It comes in pistachio. There's the year-over-year, which I look at, and the pros like Ira and Paul, they look at the month-over-month. My brain freezes. What's different here is a 2.7% year-over-year survey versus the shock of 3.1 that we saw yesterday. But interesting to see here, coming up right now, again, futures up 35, the VIX 15.69. And with the economic data coming out, there at the food court. There it is. It's coming out right now. Personal income with an elevation to personal spending. And, of course, that makes sense as well. And the core deflator, Paul, am I right to say there's an elevation there?
A little bit of an elevation there, Tom. On a month-to-month, the PCE deflator 0.3%, right in line with expectations. But the PCE core deflator, I guess on a monthly basis, again, 0.3% in line. But on an annual basis, a tick higher. It came in at 2.8% versus 2.7% expectation.
Markets lift here. The Standard & Poor's up 1.1%, 55 points. Dow lifts up 100. The Dow's behind today, up 160 points. NASDAQ moonshots up 1.3%. The Sweeney 2-year comes in nicely, 4.98%, so lower yields. Our economic indicators are brought to you by Ira Jersey and Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. We thank Commonwealth for two reasons. They're doing a great job with all their financial advisors, and thank you for their support of what we do at Bloomberg Surveillance. Also, we thank Commonwealth because it gives Ira Jersey time to get a first look at the data.
Yeah.
It's valuable what Commonwealth does here. Ira, your first look, your first take on this data.
So I'm trying to reconcile the GDP data that we had yesterday versus the numbers that we received this morning, because you would have expected either a revision for core PCE upward on a month-to-month basis, or the current month to be higher than expectations, like more like 0.4%. But we didn't get that. So I need to dig into the data to try and reconcile those two, because they ultimately should tie out, and the fact is they're not. But so the fact that we came in pretty close to expectations, obviously that's a relief to the rates market. You're seeing a bit of a rally in the long end. I think that's reasonable. We're just trying to reconcile the two different data prints, which is a little baffling.
What will you write this weekend with your team for Monday publication about the real yield? Lots of notes on this from Global Wall Street, but I'm sorry, the moving average of the real yield is 2008-ish. What does that signify, Ira Jersey?
Yeah, so the real yields, when you talk about real yields, Tom, I assume that you're talking about yields on tips on the Treasury inflation protected securities, inflation adjusted yields. The fact that they have been the driver of interest rates. So when we talk about 10-year Treasuries and the moves in 10-year Treasuries, you can basically just say what's a move in 10-year tips, and you'll get almost the same thing. And that's because the market is not concerned about the long-term inflationary environment. The market still thinks that, hey, maybe CPI is going to be 2.4%, which means that the PCE deflator would be 2%, because there's usually a little wedge there, the gap of around 40 or 50 basis points. So it's all been about the real yield, and the real yield moves has come on the back of changing expectations of what the Fed's going to do. So it's really being almost 100% driven by monetary policy by our estimation. I'm not going to write about this weekend, Tom, because I wrote about this earlier this week, so I'm not going to reiterate something I just wrote.
Rewrite it. Change a couple. Use ChatGPT, use AI, and just hit that button, Ira, and it'll be new and fresh.
Yeah, BBAI Go. It's something on the Bloomberg terminal you can help. That might help you now.
Selling all the time. Right now, folks, we need to tell you we are commercial free with you to the end of the hour. What a lineup! Ira Jersey, Bloomberg Intelligence, my economist of the year last year, Neil Dutta, will join us from Renaissance at Macro. He is an optimist on the American economic experiment. And we finished strong in this 8 o'clock hour with Cameron Dawson of NewEdge. She has been a resilient, intelligent bull through all these nuances. Futures advance up 44, NASDAQ up 1% right now. Yields come in a little bit, the 5%. 2 years now, 4.98%. Paul, to Ira, please.
Ira, if the Fed is going to cut fewer times in 2024, maybe later than people had initially anticipated, does that mean they won't cut down to whatever they need to be, whether it be 4, 5, 6 times, maybe pushed into 2025? Is it just a matter of timing, do you think?
Yeah, so we do expect that the Fed's next move will be a cut, right? But the timing has always been what we've been concerned about, when it's going to start, right? Because like I mentioned earlier, the inflation might not come down very swiftly, and you do need a more pronounced downturn in the economy in order for inflation to come down and for the Fed to ultimately cut. And when I'm looking at some of the details of this data, right, because we always concentrate on the inflation part of this report, but I think for that to start to move significantly, you have to look at the other pieces, which is the personal spending and personal income data. And look, when wages and salary are going up 0.7% every month, which is what we found out in this report just a couple of minutes ago, it's hard to imagine there being a meaningful slowdown in the economy. Right?
This is so important. We got one time for one more question, Ira, but you just nailed it. The fact of the matter is, and Sweeney's better at this because he has a social life, I don't, but the fact is we have legit wage growth. Can you say even with a more persistent above 2% inflation, we still have real wage and benefit growth?
Yeah, so real wages are actually positive, which is one of the reasons why the inflationary environment might not be affecting the broader economy that significantly.
Right.
It is affecting some things, right? So inflation and therefore higher rates are affecting things like auto sales and those big ticket items that you buy on credit.
Mhm.
But when you look at services, which tend to be smaller transactions that you pay for out of your current income, that's still really robust. And
Right.
services spending grew 4% year on year. So that's pretty positive.
Right. This has been wonderful. Ira Jersey, have a good day pressing the button on the AI chat GPT. Bloomberg Intelligence bond report. Change a couple words, put LY on the back of a few others as well. That was a setup, folks. Dutta was in a tantrum going to hang up if I didn't ask about the real wage. Let's go there with a guy who predicted this. He was just outstanding of saying the negative gloom of negative real wages would flip to a positive real wage. Neil Dutta, Renaissance Macro, can you model positive real wages into the end of the year?
I think that's probable, but I think that's largely because inflation is going to be slowing, not because not because nominal wage growth is going to accelerate. So I think that compositional story is important. My optimism around real wages improving is largely because I'm more confident, I think, relative to consensus, that inflation is cooling throughout the remainder of the year. If you look at what we've seen over the first quarter, obviously it was a very strong quarter for inflation, as we all know. And believe it or not, real wages didn't actually go up all that much, if at all, in Q1. So I think we have to be careful here about kind of tying the firm inflation, because right now, Tom, it feels like to me that people look at the consensus looks at the strong inflation numbers in the first quarter as reinforcing kind of like this inflationary boom-like dynamic in the U.S. economy. But I think when you take a step back, we do know that wage growth has been moderating. Most of the forward-looking indicators that we look at, things like the quits rate, posted wages, suggest further cooling in nominal compensation growth. If you have this sort of inflation continuing, you do need to start worrying a little bit about what that means for real wages, and in turn, what that means for consumer spending and corporate earnings. So, fortunately, I tend to think that inflation will slow, but I don't necessarily look at, the inflation data in the first quarter as kind of reinforcing the stronger growth outlook. I actually think it presents a risk if it continues.
All right. So, Neil, we've had a busy economic release schedule over the last 24 hours with Q1 GDP and then today's inflation. Can you wrap it all up for us in how you think the Fed is going to look at the last 24 hours worth of data?
I think they'll look at it and say, we have nothing to do right now. This sort of reinforces their belief that they have the benefit of time. At the end of the day, we have strong jobs growth and firm inflation. That's not a reason for them to cut rates at the moment.
So, all right, so let's kind of look ahead a little bit here. I mean, what is the inflation? I mean, you think inflation is going to kind of moderate here in the back half of the year? If so, where will it moderate? Where will we see it?
Well, ultimately, I think it starts from the labor market on out, right? And I think this sort of bottoms-up approach is interesting, and certainly that's helped people kind of nail the first quarter inflation data. But ultimately, I think you have to stick to first principles. And what I rely on is basically a standard triangle model of inflation. You have embedded inflation, or sort of inflation expectations. You have a proxy for aggregate demand, like the unemployment gap, and then you have some kind of cost push measure, right? Like exchange rates, import prices, something like that. So that's the standard triangle model of inflation that my former boss, Ethan Harris, taught me about many, many years ago.
Neil, you're reading my mind. Okay, here's what we're doing. Let me lay out the next 20 minutes. Cam Dawson's waiting. She's having a tantrum. She's not on yet. We'll get Cam Dawson on the markets. Futures up 42. It's a Cam Dawson market. But we're doing Neil Dutta. Yes, we'll get to the New York Giants. But first, Neil Dutta, right where I wanted to go was Ethan Harris. Neil Dutta, Dr. Harris wrote a blistering LinkedIn article yesterday saying, would everybody wake up, calm down, and looked at trim mean inflation statistics? Which is your favorite? Ethan Harris, adjusted inflation, Dallas Fed, Cleveland this, whichever. Which is Neil Dutta's favorite inflation statistic?
Well, Ethan has been harping a lot on the trim mean inflation. I mean, my pushback to that is that there's historically been a much higher, there's an upward bias in a lot of these trim mean measures, trim mean, median PC. They tend to run a lot higher than traditional core measures of inflation. If you go back to 2008 as an example, trim mean inflation was running a lot hotter than traditional core. And could you imagine what would have happened if the Fed was paying more attention to trim mean back then? At any rate, what I meant to say with the triangle model is that if you go through these components, inflation expectations after coming down last year, they've kind of stabilized this year.
Yeah.
Unit labor costs are slowing, right? And the dollar is stronger. So when you talk about slowing unit labor cost growth and firming dollar, how worried should we be about an upside inflation scenario? So I think you have to kind of stick with first principles. And, that's why I think the consensus should at least be open to the prospect of downside inflation surprises over the coming months on a magnitude of the upside surprises we got in Q1.
Neil, one question. The Giants go with a 20-year-old kid from LSU. I think he walks into camp 21 years old. Are these kids too young when they come to the NFL now?
Who am I to say that? They're great athletes. I don't know. I just hope that, he helps the Giants offense spread out a little bit.
Malik Neighbors, LSU.
Yeah.
And it's fun. They went with the fun. They went with the fun.
Yeah.
They didn't go with a boring tight end or,
about him,
defensive guard or whatever. They went with something that's going to create some massive energy. Malik Neighbors there with the New York Giants. Bloomberg surveillance, commercial free in this hour. And we thank Interactive Brokers, their bond marketplace. Access their vast selection of over 1 million global fixed income securities, no markups or built-in spreads, low transparent commissions. Learn more at ibkr.com/bonds. The VIX 15.50. Here's Lisa Mateo, a business flash.
Good morning. Yeah, futures still advancing even after more economic data coming in. The Fed's preferred inflation gauge, you heard it, the core PCE deflator rose at a fast pace in March, increasing 0.3% from that prior month, 2.8% from a year earlier. Now we have NASDAQ futures up 0.9%, S&P futures up 0.8%, Dow futures up 0.1%. Over to the two-year yield at 4.98%. That's down 1 basis point. The yield on the 10-year, 4.67%, down 3 basis points. To commodities we go. We'll have spot gold at higher at $2,348 an ounce. Brent crude, $89. NYMEX crude, $84 a barrel. Companies making news. We'll start with Tesla. They're down 1% right now. The National Highway Traffic Safety Administration launching this new review over whether the company did enough to fix its autopilot system. So the shares were higher. Now they're down 1%. There's also been an update on that proposed takeover in the mining industry. Anglo American rejected BHP's $39 billion takeover proposal, saying that it significantly undervalued the company. And now a source is saying Elliott Investment Management, well, it has built a roughly $1 billion stake in Anglo American. So things starting to change. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Rabila Farik and Carl Weinberg writing it up at High Frequency Economics with a summation of income and spending. The savings rate was 3.2% in March versus 3.6% in February, unrevised. Okay. That compares to 4.5% last year and 7.4% in 2019. That's the boom here that we're seeing right now. Boom in equities, futures up 45, and those tech earnings coming in. Cameron Dawson joins now, Chief Investment Officer, NewEdge Wealth Management. Cameron, the tech earnings have come in. I guess we've seen a good hunk. How is revenue growth doing? Are we seeing better than good revenue growth in this earnings season?
Yeah, it's still healthy. There has been a moderation, mostly in some of the consumer names, just because inflation has moderated, meaning that you don't have as much pricing power as you've had over the last couple of years. But I think the real story is not just on the revenue line, but it's on the margin line and how much operating leverage these tech companies are getting. It's absolutely incredible. A little bit of cost control and profits absolutely boom. I think you then add on top of that that all of these large cap names are sitting on massive cash piles, that the longer that the Fed keeps rates high, the more that they get to keep earning big yields on those cash piles, which just allows them to do things like start dividends and increase buybacks. So clearly for the large cap names, there's a very virtuous cycle.
Sounds like Cam Dawson's taking the Paul Sweeney Kool-Aid here.
Yeah, I mean,
the dividend.
It's not the worst thing in the world to put out a dividend there for your investors. So, Cam, any takeaways just from earnings so far this season? I mean, we're seeing some pretty strong numbers out of the tech names, and a lot of folks would say tech has to leave this market, so maybe we're in good shape. What are you seeing?
It is encouraging that tech has held up well. We think the real test for tech will really come in the later part of the year and into 2025, because that's when forecasts are for tech earnings growth to decelerate rather meaningfully, and then for the rest of the market to kind of take up the earnings growth and really be the key driver. So if that happens, and it will be something that is a very high bar for the rest of the market to jump over. For now, tech is very strong, and at 30% of the index for the S&P 500, that remains ultimately the most important sector.
So, I mean, then that kind of goes to the issue, Cam, that a lot of investors, I think, wrestle with, which is, do I overweight? Do I stay overweight some of these tech names, or do I try to find some value in other parts of the market, whether that's financials or healthcare or energy? How do you think about that at this stage?
Yeah, I mean, that's the real push-pull, because tech has the earnings growth and the stock momentum, but it's extraordinarily crowded. If you look at sector flows, tech is the only sector that has had meaningful inflows at $70 billion using the Deutsche Bank data. And it's also really expensive. But on the other hand, if you look at the value sectors, they're underloved, underowned, very cheap in some areas. However, they don't have that earnings momentum.
Yeah.
But they have seeing their stock prices pick up, which is encouraging.
Okay, I have a toothpaste company. I'm going to name which one it is. But Cam, you go to the heart of the matter, which is you look at the FA screen of a traditional, boring, wonderful, all-American value company. They don't have the revenue pop. Can you predict in the next 24 months, a la what Zuckerberg wrought, that we're going to see a new rationalization of Jack Welch-like cost cutting across all sectors?
I used to cover GE, so I'm not necessarily going to laud the era of the Welch time and kind of the aftermath of that, because cost cutting, you can't cut your way to growth. I think the reality is, and this is how we always focus our investments, which is ones on high return on invested capital. So we want to focus on companies that for every dollar that they put into their business, they get more dollars out than the average bear. And so what that leads to is that you do find a lot of that within tech names, but there are also places within the industrials, within even some materials.
Okay, give me an example. Come on, give me. It's not an average bear; it's an average Ninja Turtle. Give me an example, Cam Dawson, of a value company doing our return on ROIC, doing ROIC in a nice way.
Yeah. So some of the names within the industrials that we do like are in the services side of things. I can't give you any specific names, I'm sorry. And I don't even have any turtles with me today. But if you look at some of the services names that mask as industrials, they do a lot of things like insurance data and that type thing. They're really good in defensive or choppy markets and don't have that same kind of sensitivity to underlying GDP, where you have to see an absolutely booming economy just for them to make a little bit of money.
So I guess let's just take a look at this economic data we saw in the last 24 hours. Cam, what's your takeaway here as it relates to maybe how the Federal Reserve will kind of act over the next several months? Did you learn anything over the last 24 hours as it relates to our GDP, our inflation picture?
Yeah, I think it's ditto to what Dutta said, which is that this data doesn't necessarily mean that the Fed has to do anything at this time. We think that the bar for rate hikes from here is much, much higher than the bar for rate cuts, which just means that it won't
Right.
take a lot of easing in economic data for the Fed to start putting that cut talk back on the table, whereas you'd have to see a significant acceleration in inflation for the Fed to start raising rates further. But we do think that the Fed is going to keep rates as they are for some time
Right.
because the data today simply doesn't support any urgency for them to start cutting.
One quick question, then we got to go to another area with you, Cam Dawson. What's your SPX call 12 months forward?
We think that the returns are going to be closer to average, given this starting point, and what average is high single digits.
Okay.
And this starting point is one where you have allocations to equities that are not at peak levels but are extended,
Okay.
valuations that aren't at peak levels but are extended, which just supports that kind of double-digit, better than average returns that
Right.
we've had in different years is going to be quite hard to achieve.
Like most people that really kill at strategy, it started out with individual security analysis. Cam Dawson, I still don't get GE Aerospace out of Cincinnati. That's un-American. but Cam Dawson, Lawrence Culp shows up, and he's a Danaher and all that. He's popped. Are you ready, Cam? 19.3% per year since he walked in the door. What Lawrence Culp, the pieces he picked up, it's really something what he's done.
Lean manufacturing is a beautiful thing. It's fantastic. The ability to be able to take costs out of a business without cutting to the bone and really focusing on the kinds of businesses that can generate a great deal of upside. We've seen that with some companies like an IDEX or an ITW that use the 80-20 approach. And the thing about those kinds of names is that it gets you back to those high return on invested capital. Find companies that for every dollar that they put into their business,
Right.
they get a greater return.
Cam Dawson, thank you so much with NewEdge. Really love it. That was really, really excellent as well. One of the great things out there is, we get so much research in, hundreds of research in. And Paul sees stuff I don't see. I see stuff Paul doesn't see. And he's got a jewel here from Laura Martin, who holds court at Needham. She's been doing this a few years, and I see the dirty U word there, underperform. On Fortress Zuckerberg.
Yeah.
That's quite a statement.
Yeah, her research, and I worked with Laura Martin. She's now at Needham back at Credit Suisse First Boston. She's covered media for decades. She's always been a big proponent of looking at return on invested capital.
Like Cam Dawson.
And she just mentioned that. I kind of brought it up for me. So, you look at a Meta, and that's been a story of cost cutting. Driving that stock higher, which is not something you think about when you think about some of these social media companies. You think it's always been about top line growth. But they've done it with cost cutting, which spooked people a little bit this week with their earnings when they said they're going to really step up on AI, and that means spending, and that means costs and things like that. So that got investors a little bit spooked.
I'm going to go to this one sentence, and it's my own bias. And, Reality Labs losses, quote, meaningfully higher on AR, VR, and metaverse.
Yep.
I'm fascinated what Luca and Tim Cook say. I think it's Tuesday at Apple on this vision thing. I mean, somebody had out, I think Mark Gurman.
Right.
Mark Gurman, I think, on Power On had out the vision thing at Apple's it's a failure. Is that too strong a language?
I haven't seen Lisa Mateo walking around with the goggles on. So if Lisa's not doing it, I kind of consider her an early adopter. I don't see it happening. But maybe if we're out in Silicon Valley, we'll see some kids walking around Palo Alto.
Time for a grocery report right now. We go to Lisa Mateo for this. Lisa, Costco, does it beckon this weekend?
Another week. I could last out another week, and then I'm gonna have to drop another $500.
Well, your son's home on leave.
I know.
That's why I asked.
And the bill's gone up a bit since then.
Yeah.
The first thing he did, he came in and he opened the fridge and he said, "Wow, a
Yeah,
full
there we
fridge."
go.
That's what I'm talking
exactly.
about.
Thanks, Mom.
Afterthought's boyfriend Thor showed up, and the grocery bill doubled.
Yeah.
See?
This is
Growing boys.
Yeah, absolutely.
Okay, so Costco maybe. The whole Costco model. I mean, we don't talk enough about this. I mean, Walmart and Costco.
You have to be serious shoppers like Elisa Mateo.
I can't do it.
Not like us. I mean, we go out and get one or two things.
You need the space for it too. That's the thing.
That's
New York
true.
City apartments don't have the space for the big.
Do you ever have like a refrigerator or freezer in the garage?
I have the fridge in the garage.
Nice.
That's also the beer fridge.
That's
during
the beer fridge. Very
summertime.
good.
Then you have the freezer in the basement.
Yeah.
Okay, so you got to make room for it all.
See,
it's
that's
a lot.
how you do it, Tom.
But it saves in the long run. That's
showed
what I keep
up
telling
and
myself.
They showed me the door. It wasn't successful.
Oh.
I said, they're dragging me out the door to the parking lot, and I said, but I know Scarlet Fu.
Right. No,
And they said,
didn't
it doesn't matter, There's your Costco update here
Yeah, exactly.
into the weekend. We're having a lot of fun this week, but the answer is this is some serious stuff that's going on. We really thank you all for being with us. We're going to be with you for another hour. Do you have Molly again today, the Molly Smith show?
I think we might have Emily Grafeo.
Oh, my word.
I mean,
it's an Emily show.
It is. It's an Emily show for 2 hours.
Did
How good
anyone
is that?
from UVA get drafted in the NFL draft? I don't know. She'll know.
I can't imagine. Somebody from Duke got drafted in the first round.
Did you
How
see
about
that?
Yeah. So how about that? So
Very
football
impressive.
powerhouse.
Yeah.
So Costco stocks up 9% this year. That's a $320 billion market cap company.
Lift to the market off Google and Microsoft. Again, earnings next week. Led by Ed Ludlow. It's Friday. Katie.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. An inflation report today, a lift to the equity markets, but lots else going on. We have a packed 9 o'clock hour for you. I'm going to get right to it. Just so much to talk about. Bloomberg Surveillance this morning brought to you by Build America Mutual. They insure U.S. municipal bonds that finance essential American infrastructure and provide guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. Markets swirl, I'd call it here, off that inflation data with our Bloomberg Business Flash. Lisa Mateo.
Oh, you got that right, Tom. Yeah, and that's after that inflation report coming in roughly in line with Wall Street's estimates. The Federal Reserve's preferred inflation gauge core PC index, it rose at a fast pace in March. Tech stocks also in the spotlight. We have Microsoft and Google's parent Alphabet showed their spending on AI and cloud computing paying off. We have Microsoft up 3%, Alphabet up 11%, Snap up 24%. On the flip side, you have Intel. They're down about 8%. We have NASDAQ futures up 1%, S&P futures up 0.8%, Dow futures up 0.1%. Quick look at the bond market. The 2-year yield at 4.97%, down 2 basis points. The 10-year yield at 4.66%, down 4 basis points. That is your Bloomberg Business Flash. Tom and Paul.
Thank you so much. Now joining us, of course, with Face the Nation. It's one of our most popular things here. It is nationwide on Bloomberg Radio, 2 p.m. on Sunday. And, of course, Margaret Brennan providing that leadership across the CBS television network. When I first met Margaret Brennan, Paul, what I learned is this was a student. She reads and has a historical template to what's going on right now. I learned that with her through the reach of the Middle East as well. Margaret, I lived it, you didn't, but I know you're a student of 1968. The protests that CBS is covering at the different colleges in America, is there elements there to 1968, or is this different?
Well, it's different, but certainly the last time we can remember large-scale protests at college campuses like this, I would say probably would take you back to 68. Of course, in the summer of 2020, we saw mass protests across the country. That was amid COVID, and most of those students weren't even in the classrooms. So it's hard to find an exact corollary, but I think what you're putting your finger on is that this isn't just a protest disconnected from having a political impact. And that's something that we have been tracking for months on Face the Nation, which is, if you look at the motivation of many of these protesters, it is about Joe Biden and his support for Israel in terms of not putting any strings on how U.S. weapons are used to prosecute that war in Gaza. And then you get the anti-Semitism sprinkled in there, which is so deeply troubling. And then you get the politics layered in there. We do want to talk about this on Sunday.
The tension here, and this from CBS and their reporting, Speaker Johnson suggests he believes, quote, the National Guard should be called in. The mayor of New York City, Mayor Adams, quote, strongly disagreed on CBS News New York on Thursday morning. I mean, that's the crucible we're at right now, Margaret Brennan, isn't it?
It is, and I spoke with Mitch McConnell, the Republican leader in the Senate, about this to say, do you believe what Mike Johnson believes, or even what the governor of Texas, Governor Abbott, is saying, which is like arrest all protesters. And he was more moderate. He said, look, this is a free speech issue, a First Amendment issue, and this needs to be handled by the university presidents who need to get control. He put the onus on them. Also said there should be a place for civil discourse. Isn't that what colleges are supposed to be about anyhow? So he was really pulling back from that idea of using federal funds as leverage here, for example. Johnson and some Republicans have floated that.
Paul, jump in here with one more question, but I'm going to just make as clear as I can. I don't think straight about this issue.
No.
I remember
it's tough.
10 a.m., 12 noon, 2 p.m., the day at Kent State.
Yeah.
I'm not thinking. I don't think clearly on this.
No, not at all. So, Margaret Brennan, CBS, Face the Nation this Sunday on the CBS television network. What do you have for us?
We will be talking about these campus protests and have some reporting on what transpires. They seem to be spreading. We will talk about the politics of it, as I said, in terms of the young voter upset, black voter upset, progressive voter upset with Joe Biden's support for the war in Gaza. We will talk about as well what the trial at the Supreme Court and the hearings about whether a president can face criminal prosecution or if he's totally immune. Our Jan Crawford will be there, and the director of UNICEF will talk to us about the next generation, the children in Gaza, the children in Israel, and the children of Haiti who are starving.
Margaret Brennan, thank you so much. See Margaret Brennan and Face the Nation, the CBS television network, Sunday morning. You can hear it. Face the Nation Sunday, 2 p.m. in New York, Washington, D.C., and Bloomberg 1061, Boston, Newburyport. Face the Nation this Sunday at 2 on Bloomberg Radio. Listening in and live in our studio, Zach Cohen, our leadership on Congress. Zach, you've been listening to Margaret Brennan there. What is the Beltway debate this Friday afternoon? He's at the Capitol Grill, usually by 4 p.m., or the Hay Adams down in the basement. What's the debate Friday afternoon in Washington on these protests across the nation?
Well, House Speaker Mike Johnson's point when he was at Columbia the other day did say, look, there is a nexus with federal funding here. They could opt to cut the funding for these universities if there isn't some effort to try to tamp down what's viewed as anti-Semitic protests on these college campuses in reaction to Israel's war in Gaza since the October 7th attack by Hamas. Now, there are questions on exactly how much support there would be to do that. A lot of this money goes toward research rather than, administration or some of the actual levers of these universities that would be in charge of making these decisions on how these college campuses are handled. And obviously, you would need bipartisan support in order to cut off that federal funding. And so, as we all know, Congress just avoided a shutdown in March. They won't have to deal with government funding until September at the earliest. And so that's probably the earliest where we would see any actual effort to try to include some provision in a funding bill that would tackle this.
And Zach, you mentioned Speaker Cohen. Speaker Johnson. He did get that legislation passed for the aid to the Ukraine and for the Middle East and Taiwan. Did he sacrifice potentially his job as Speaker, do you think?
I think very few people think that Speaker Johnson will be Speaker in January.
Really?
Either because, House Democrats are probably favored to flip the majority at this point. That could change as the election cycle goes on. But the other question, obviously, is, would he want to stay in that job, or would somebody like Tom Emmer, the Minnesota Republican, or Steve Scalise, I should mention, the Louisiana Republican, maybe they step into that role instead? I think everybody recognizes that Mike Johnson has a really tough job, but whether he has any staying power in it, I don't think he's going to get ousted anytime soon. It's just a question of when there's a natural transition.
We usually don't go here, but you're in the studio, so I'm going to make an audible here. I got the Washington Post. The right starts to reckon with Marjorie Taylor Greene. I got CNN 2 hours ago. Right-wing media ruptures over Marjorie Taylor Greene. Zach Cohen was Marjorie Taylor Greene and company and limited. How about that? Were they strengthened out of this madness, or have they been weakened?
It's been really fascinating watching Congresswoman Greene's evolution. She came into Congress as, her image was that of a QAnon believer, conspiracy theorist, really with not a lot of power other than with her public persona and her obviously ability to fundraise, especially grassroots support. So she wasn't really beholden to some of the normal power players, lobbyists in Washington that you would anticipate from maybe committee chairs or leadership. During Kevin McCarthy's speakership, she was very close to him and was actually very influential in how that operation ran. He kept her very close, knowing that she could do something like offer a motion to vacate, as she's done from Mike Johnson, although she hasn't actually triggered that vote in the House of Representatives. And so it remains to be seen where she goes from here. She's sort of, dangling this sort of Damocles over Johnson, saying, because you've put this Ukraine aid on the floor, I'm going to move to oust you. And probably won't be the votes there, because Democrats have said we want to avoid what we saw back in October when McCarthy was ousted and Johnson was put in that chair about 3 weeks later.
How's the president doing? We don't usually do open questions. We do we try to act like we know what we're talking about, but we don't here. How is the president doing into May and into the campaign heating up?
I think Bloomberg just did a poll that showed that he was trailing in a number of really key swing states. We have to remember that the presidential elections in the United States are decided by states and not by a national vote.
Right.
And if he's trailing in places like Pennsylvania and Wisconsin,
Right.
Georgia, Arizona, those are the states to be watching in November. That's going to make it really tricky for him to find the electoral votes necessary. And so I imagine as the contest sorts to solidify around Biden and Trump, that becomes a very different proposition. Biden likes to say, compare me to the alternative, not to the almighty.
Right.
And right now, a lot of people are looking at Biden and hoping for the almighty.
I got time for one quick answer here. I'm so sorry. We need more time with you. I think if Eric Rumpé at the Post or you're totally tuned into the media. Should the president give the New York Times an interview? It is just insane that hasn't happened.
Oh, I'm all for more media access to policymakers. I'm a little selfish in that regard.
What are they thinking?
I think especially given the fragmentation of the media over the years, it used to be, there were, the networks and the wire services like us that, would basically dominate the scene. And now policymakers, lawmakers, politicians can basically go to whoever they want, whoever has the closest ideological bent to them and the most favorable audience. Okay. And that's what we're seeing, not just from Biden, but from lawmakers all over.
Did I not get the memo? Are you moving to New York?
No.
Damn.
Zach
Cohen, thank you so much. Just a terrific brief there. Margaret Brennan and Zach Cohen on your Washington. Futures up 36. With your news in New York City, Michael Barr.
Very much. Tom, Paul, Lisa. President Trump is due back in court for his Manhattan criminal trial. Former National Enquirer publisher David Pecker will be back on the stand, detailing how the Enquirer bought the story of former Playboy model Karen McDougal's alleged sexual relationship with Trump before the 2016 election and quashed it, a tactic known as catch and kill. Yesterday, there were historic Supreme Court arguments with the justices now poised to decide if Trump has absolute immunity from criminal prosecution for official acts while in office. In a media interview last night, Trump described the Supreme Court arguments as a, quote, very, very good session. Tensions are rising as pro-Palestinian demonstrators continue college campuses across the country. USC announced it is canceling its main graduation ceremony. Graduating students are reacting.
I want to reverse this, yeah.
I don't want my family have to deal with that. My family won't be joining, and that's okay. It's just because this is not the ceremony. This isn't the sentiment, nor the feelings that we want to have at commencement.
USC's main stage graduation traditionally brings about 65,000 students and their loved ones on campus. Secretary of State Antony Blinken has met with Chinese President Xi Jinping. Blinken stressed that it is important to manage the differences between the two countries over bilateral, regional, and global issues.
I encourage China to use its influence to discourage Iran and its proxies from expanding the conflict in the Middle East, and to press Pyongyang to end its dangerous behavior and engage in dialogue.
Blinken highlighted progress in bilateral cooperation in military communications, counter-narcotics, and AI. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Sweeney statistic. Well, Michael Barr, thanks so much. 4.97%. Sigh of relief. You think at 8:30, the inflation numbers come out and Mike McKee and everybody, they just check out?
Yeah, of course.
It's like work from beach at 8:32.
Exactly. They've got it done. The work is done.
We'll see.
He sticks around, though. I don't know.
Oh, yeah.
You get points for showing up. That's what I was told once back in
Really?
the day.
Work from office? Is that where you are?
That's what I heard.
What do you think? What's your prediction next year on work from home?
I don't know.
Come back Labor Day, management has meetings, there's tantrums. Where are we going to be January 3?
No change. And that's a shame because last night I had dinner with a group of bankers I worked with in 1986. We're still get together every year. We're still tight. Do the kids get that today? I don't know.
No, they don't. They do not have the privilege of using the Amex. Thank you, Red Oak Keeper of the Amex. It's Smith and Walensky, like Paul did last night. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still pointing to a higher open. NASDAQ futures up 0.8%. S&P futures up 0.6%. Dow futures are little changed. The 2-year yield at 4.98%, down 2 basis points. The yield on the 10-year at 4.67%, down 3 basis points. Checking in with commodities, spot gold higher at $2,346 an ounce, and Brent crude at $89 a barrel. To earnings we go. We'll start with Exxon and Chevron. Those shares are lower. We have Exxon down 2%, Chevron down 0.7%. Disappointing first quarter performances, and that was due in part to falling natural gas prices, lower refining margins in that first half of the year. AbbVie up 0.7%, lifted first year guidance, newer anti-inflammatory treatments. Well, that kind of made up for its Humira losses. And then consumer goods giant Colgate-Palmolive up 1.5%. First quarter earnings beat, and the company raised its guidance too. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. We do economics, finance, investment, and international relations. And of course, within the international relations is the politics of the nation. Paul and I are excited about ramping up coverage into the presidential election, the conventions, and of course what we will see the first Tuesday of November. We thank Margaret Brennan for perspective. Face the Nation this Sunday afternoon, 2 p.m. across Bloomberg. And also we thank Zach Cohen, who I thought Paul was just brilliant there with his work. He's in the trenches inside the Beltway, and I thought there was a lot of wisdom there. We're going to go back to core knowledge right now, economics. And what's great here, and this is what the show's about, boy, is there a difference of opinion. Lindsay Piegza, Stifel, they should raise rates. They should get out front, raise rates, and finally crush the inflation that we see. Francois Trahan going totally the other way and saying these guys are out of their minds. The real rate and nominal GDP scream get out front ex ante and not ex post. He's never ex post. He's always out front at the Fed meeting. Michael McKee joins us now for this debate that's out there. How did the debate between raise rates, outlier, cut rates, the zeitgeist, how did it shift in the last 48 hours?
It bounced pretty well. Yesterday, we saw markets price out the idea of a November rate cut, push it to December. And for whatever reason, maybe because we're sort of back to status quo ante on the inflation thinking, we've got November back in the mix. So you get the market volatility as one of the first things analysts told me when I came to work here many years ago is that the first job of markets is to overreact to everything.
That's right.
And that's kind of what we got. The PCE numbers today were, as many nerds in the eco profession were suggesting, a result of January and February being revised higher. March doesn't show any additional inflation pressures, just kind of what we had. So the story doesn't really change at this point. The Fed is on hold. We don't have the progress they want to move rates lower, but we don't have the inflation they would need to move rates higher.
That's kind of my read. I came in this morning thinking I was going to see a higher PCE core deflator. Came in at 0.3%, right in line with expectations, in line with last period. I wouldn't have been surprised to see a 0.4 or something like that. We didn't get it. So,
are you going to this? Have you gone off you've taken the Kool-Aid? You're now month over month?
I think I might be.
It's too much.
I think I might be. So
Eric,
we didn't get that.
Something.
So again, that kind of goes to your argument, Michael. The Fed they can just sit there with a straight face and do nothing, I would argue. Is that kind of...
Yeah, somebody asked me about that earlier today.
It's called Lisa Abramowitz. Asked you about that.
The brilliant Lisa Abramowitz. The markets functioned just fine with interest rates between 4 and 5.5% for decades.
Yes.
And then we got into the great financial crisis. We went to zero. We lived with zero rates basically for the last decade. And now we're reverting. I sent a message to Mohammed El-Arian, he hasn't responded yet, to ask, are we back to the old normal? But if we are back to the old normal, then investors will adapt.
Yeah, Dr. El-Arian's checked out. He's too interested in Queens Park Rangers and Leeds this weekend. Huge match. I don't understand it. It's just something I can't understand. Here's where I'm going. We're going nerd again, folks. We did it with Jane Foley on unsterilized intervention. You take a log chart of GDP, you take out the negative numbers. You've got a run rate of George Bush, the younger, GDP of 3.2%. And with the two lifetime crises we've had, the run rate of our present GDP is 2.x%. Now we've got inflation back to the old run rate, a higher inflation, but we have a run rate of lower GDP. In the coming 12 months, are we going to see a lift in the study of potential GDP where people start bringing up 1.x% potential to 2.2, 2.3 because of productivity, because of innovation?
Well, that's something that's circulating as an idea. I think it needs to be validated. What we've seen in the past is you get productivity bumps, especially coming out of recessions, and then they fade. The thing everybody's looking back to is the 1990s and the PC revolution, and Alan Greenspan saying we can let inflation ride for a while because we're seeing these productivity gains, and they lasted for a while, but then they faded as well. So it's probably too early to really measure AI influence. We have had elevated productivity for the last 3 quarters, but it's got to last for people to really mark up their idea of potential growth. Now, in the immigration numbers have suggested that we could see higher growth because we're getting more workers, but I think everybody's reluctant to make a firm conclusion on that.
So on the labor market, that's interesting. I mean, the labor market remains resilient there, Michael, and I don't know how to factor in that immigration impact, although I'm hearing more and more economists talk about it as a net positive to the U.S. employment situation. But is there any reason to believe that this U.S. labor market will weaken materially enough for that to be a factor for the Fed?
There's no reason to believe it based on what we see now. The problem is these things tend to come on quickly if companies lose their confidence about what's happening in the economy. Now that we've seen, when you start looking at the little bits of data, imports were up big in the last quarter, had an effect on overall growth. But you wouldn't be importing if you didn't think you could sell the stuff.
Yep.
And we wouldn't be getting 200,000 jobs a month if you didn't think that you were going to need the workers. So at this point, it looks good, but confidence can collapse quickly. Don't know what it would be.
We got 1 minute left. Quarterly unemployment, non-farm payrolls. We lost 1.4 million jobs in the quarter of early 2020. We made back 4.6 million with 14 stimuluses and saving the day out of Washington. The last 3 quarters, 246, into Christmas 290, and I got a March ending quarter of 303. This is a fully employed America, period.
Yeah, I mean, the Fed has not, economists have not come around to the idea that the natural rate of unemployment is below 4%, and we've been below 4% for more than 2 years now. So obviously there's something at work here that suggests that we can live with this kind of unemployment, and we're still getting it.
Okay.
All the Sweeney offspring are employed. I can report that.
Yeah, it's a miracle. Sweeney's my God. You know.
Lisa, has anybody mentioned that Tom and Paul are matching?
Yeah, we did open the show.
I just noticed this.
Lisa's now color coordinating us for YouTube.
Yeah, exactly.
Google called up. You know, Ruth
part of the new thing.
Ruth Ford called up and said, "We love the show, but they got to get coordinated." Lisa's in charge every day.
And they're wearing Denver Broncos orange.
Yeah, it's even better. Michael McKee, thank you so much. Driving here to the market opening, and it will be interesting. I mean, Paul, where were we after Meta? Oh, the tech.
Yes.
The tech revolution. It's over.
Exactly, and we had some good prints last night. Yeah, crushing. We even got some more dividend payers out there in Silicon Valley. I didn't think we'd ever see that. So they got to figure out what to do with all that free cash flow, and they buy back stock. Why not give a little bit out via the dividend?
Levels here to get you started. SPX futures 5117, Dow 38,300, Nasdaq 17,700. NASDAQ 100, remarkable, absolutely remarkable. The VIX from a 19 level into 15.48. Stay with us. Bloomberg Surveillance on Apple CarPlay. On YouTube, search Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo, alongside Tom Keene and Paul Sweeney with your opening bell report. All right, setting the stage for you. We've had a pretty good run pre-market thanks to that big tech rally. We also received some more economic data. The Fed's preferred inflation gauge rose at a fast pace in March. Meanwhile, personal spending in March rose, and it was more than economists were looking for. So let's see how the markets react on this end to the trading week. We go to the S&P 500 now, up 0.6%. We go to the Dow showing it's a little change, and as far as the NASDAQ, it is down. It is up about 1% right now, just kicking in. There you go. As far as the bond market, the 2-year yield at 4.98%, that is down 1 basis point. The 10-year yield at 4.67%, and that is down 3 basis points. To commodities we go. We have spot gold higher at $2,342 an ounce. Brent crude $89 a barrel. NYMEX crude at $84 a barrel. Since we were talking about the tech rally, want to check in with Microsoft up 3%, Alphabet up 11%. We have Snap up 26%. And then you have Intel on the downside, down 10%. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much. This is one of the great stories. We all know the roll-ups in the Northeast, but I think so many people, particularly on American Wall Street and worldwide, don't understand the regional roll-ups that are out there. First Citizens is truly one of the great roll-ups going across 150 years in America. Some of the newer names here are bank acquisitions in Milwaukee, Wisconsin, King of Prussia, Pennsylvania, on. And CIT Group is a name that everyone will know in New York. They even had picked up a chunk of Silicon Valley Bank as well. They, down in Raleigh, they do a couple things. The first thing they do is hire people that are really experienced from other firms that say, you know what, I think I like Raleigh. And they do that with Phil Newhart right now. But Paul, the other thing they do is they only hire Duke graduates.
Of course.
That's all they hire is Duke graduates.
They know what they're doing down
Duke
there.
Economics. Why don't you bring in the poor victim?
Very good. Phil Newhart, Director of Market and Economic Research for First Citizens Bank and Trust Company. Phil, we've had a busy week on the earnings front, also a busy week on the economic front with the PCE data today, GDP yesterday. Tie it all up in a bow for you. What did you see coming out of some of this economic data?
Yeah, I think it reemphasizes that fundamentals remain in place. If you look at GDP data yesterday, truth is the underlying results, final sales looked a lot better than the headline. We've had good retail sales data, good payroll data. Initial jobless claims are still low. And earnings, 80% of companies are outperforming earnings expectations. There's been some volatility around guidance. The truth is it's been a pretty good earnings season. So we think fundamentals remain in place. Yes, inflation's running hot. We do think the Fed is on hold for now, as most others do as well. But fundamentals remain in place, and we remain pretty optimistic from a market perspective.
I guess inflation is probably for a lot of investors kind of job one here. Where are we in terms of fighting inflation here? Is this a momentary pause in the decline in inflation, or maybe something more fundamentally challenging?
You know, I think this is a reminder we're in the last mile. It's a lot easier to get from 9 to 3% inflation than 3 to 2. We're seeing sort of a sideways move, and I think it's going to be really difficult to get all the way down to the Fed's target of 2%. And it might be that the economy and markets look through that higher inflation running in the 2 to 3% instead of 2 flat is okay for the economy. It does appear maybe we are not as interest rate sensitive as we have been in past cycles. Look at what the stock market has done just since last October. And we've had a drawdown. Were we down less than 4%? The truth is pretty resilient. Inflation elevated, but maybe not so elevated that gets in the way of company fundamentals.
So I guess that kind of brings you to the question here. Is there an argument that the Fed maybe could put a rate hike out there and really surprise the market? Or is, sitting on the sidelines probably the preferred strategy for the Fed? How do you think they'll go?
Our base case and our preferred strategy is sitting on the sidelines, right? We do have a positive real rate that should be restrictive for the economy. Yeah. But I wouldn't put it at 0% probability that the Fed hikes, right? There is potential. It's only April. If inflation data were to reaccelerate, I think that's going to become more of a discussion, but certainly not our base case.
Phil, with your equity securities analysis history with Wells Fargo and with Morgan Stanley. Does this new higher real rate, I'm going to say 2.25%, let me get that exactly, 2.24%, does it impinge business? Does it change how corporations behave?
I really don't think it does. I mean, the exception to the rule historically, as you're well aware, Tom, is post-Great Financial Crisis, right? Extremely low rates, money is free. We've really seen a return to normality. Company margins are expected to start to expand. I think we have a dynamic economy. Companies are more agile than we give them credit. And they're adjusting to the idea of higher rates that really aren't that high versus long-term history. I'm not sure it's that restrictive. Look at the Bloomberg Financial Conditions Index. Pretty loose financial conditions out there. I think companies are adjusting.
There we go. I like when he does it. It's 21 ratios, folks. Good morning, Michael Rosenberg. And it's come back from a much more restrictive tone. It's sort of midway between restrictive, accommodative, with a 1 standard deviation statistic this morning. I look, Phil, people write over the weekend, but I'm going to take this to a First Citizens angle. People are coming in, their heads are spinning. They weren't on the Ed Yardeni bull market. They weren't on the Ben Laidler bull market of 2 years ago. How do you catch up if you're conservative?
It's a reminder to stay invested, right? It's very hard to predict what the market's going to do in the short term, much less the medium term. We encourage clients to stay invested. We do have a pretty robust equity position. We've allowed portfolios to drift. And we think it's just a reminder to have your correct buckets, long-term assets. Don't try to time markets. Stay in equities because they can go up when you might not think they would. And this year so far has been a reminder of that.
What are the banks going to do? I know you can't comment on First Citizens. Take it away from the regionals, the super regionals. What is the banks in general going to do given the new higher interest rate regime?
Yeah, we've seen banks tighten lending standards on net. I think that persists given where we are in the cycle. But the truth is, as long as fundamentals remain in place, there is a room potentially for banks to look to loosen standards a tad bit, given retail sales data, the consumer spending data just this morning looked pretty good. So I tend to think that, yes, tightening tilt, but maybe not the dramatic tightening we saw after the events of last March from a lending standards perspective.
What's your big advantage of North Carolina? Paul and I are sitting up here in 3 zip codes. Our biggest worry is the president's going to be in town next week, and the traffic will be absolutely impossible. You've done this for years, Phil. He's cut and chiseled. I mean, he's way older than he looks. But, you've done this with some major firms. What's the big advantage of thinking about economics, finance, investment from a different purview?
When I left New York and came to North Carolina, I think the big advantage is you are much closer to the real economy than sitting in New York, living in the city, commuting in. Things like autos. It's amazing the perspective I have on auto sales now compared to I used to, because you can see what's really on the road. We're benefiting from real population growth, so also a really quickly growing economy in North Carolina and across our footprint. But I think there's advantages in that I speak to real businesses, a lot more small businesses than I used to, which, by the way, are struggling more than the mega caps of the S&P 500. A little bit more real world perspective. I found it enormously valuable.
Right. One final question. Graham Barton, 26th selection in the NFL draft. I mean, Duke sends another victim to the NFL. It's a rising program, isn't it, Phil?
It is. It's completely different ball game than when I was there. My freshman year, we did not win a game, and we were playing non-D1 opponents often, and still not winning a game. So it's unrecognizable for when I was there, but I'm enjoying it certainly.
We'll tell David Rubenstein we talked to you. Phil Newhart, thank you so much with First Citizens today. Really important perspective there, folks. I can't say enough about our effort to get outside 3 zip codes of zeitgeist, and I think I'd add 1 quadrant or 2 quadrants in Washington as well.
Yeah.
I mean, it's so important that we leaven the guest list with people like Phil Newhart. There's just no other way to...
Yeah, and Phil was saying, he talks to, being part of a regional bank down there, speaking to more mid-size, small size corporate customers, businesses,
Yeah.
their customers, you get a different perspective and maybe a broadened perspective here. So good to check in with.
My unscientific anecdote is it's booming out there.
Yeah,
I mean, I
And
don't.
particularly down there in that North Carolina Research Triangle Park area. It's always been a nice technology hub down there, but it's really taken off over the last 20 years.
2-day chart, Google up 8.8%.
Yeah.
The Sweeney dividend, it clicks
Sure.
in.
Why not? You wonder if Tim Cook is paying attention with
I-
his
I- I've been saying it for
0.5% dividend
weeks.
yield.
I looked at DVD. For those of you with the Bloomberg terminal like Michael Barr, you look at DVD and you line up the 1, 3, 5-year dividend growth. I look at the 5-year dividend growth. What are these guys waiting for?
Yeah.
I mean, it's all there is. They could do a double on dividend growth. No, that's too much. Could do up 80% on dividend growth.
Yeah.
And nobody blink an eye. It'd be like completely appropriate. Dow up 82 points. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Pro-Palestinian protests on college campuses continue to grow. This student is at Indiana University in Bloomington.
We asked them to adhere to BDS standards, boycott, divestment sanctions writ large. That means cutting ties with Israel and study abroad programs and Israeli universities, in the same way that was done with apartheid South Africa.
Meanwhile, USC announced it is canceling its main graduation ceremony. At the University of Texas, pro-Palestinian demonstrators are met by pro-Israel protesters shouting, "Bring them home," a reference to hostages held in Gaza. Defense lawyers in Donald Trump's hush money criminal trial are poised to dig into a former tabloid publisher's accounts of how he worked to protect Trump's 2016 presidential campaign. David Pecker will return to the witness stand for a fourth day. Yesterday, the Supreme Court heard close to 3 hours worth of arguments on whether former President Trump is immune from prosecution. Secretary of State Antony Blinken met today with Chinese President Xi Jinping on the tail end of a 2-day visit to China aimed at stabilizing relations, even as plenty of differences remain on trade and Beijing's support for Russia. According to Brown University political science chair Wendy Schiller, the White House needs to convince China that another Trump presidency will be worse than a second term for President Biden.
Trump imposed worse tariffs. Biden kept some of them, but loosened others. That Trump will be a more erratic, more chaotic, and more dangerous partner to deal with in the Biden administration. So they should cut deals now that they hope will persist throughout the Trump administration.
Wendy Schiller of Brown University was a guest on Bloomberg Daybreak. Finally, round 1 of the NFL draft. Quarterback Caleb Williams was selected number 1 overall by the Bears. Round 2 is tonight. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
And Michael Barr called an audible. He's going to join us here for our next block of his date calendar. So we've got a legit guy who changed the world coming in. Jordan Reed, with a lot of injuries, had a wonderful NFL career. And I'm going to go to a headline here about the revolution that was the old, sluggish, boring tight end. Chiefs' Travis Kelce Swift becomes fastest tight end to reach 11,000 yards. In our youth, Michael Barr, tight ends didn't do 11,000 yards.
You're thinking of the old Jack Youngblood days.
Yeah, exactly. They were thugs who sat on the right or left side of the line and moved 1 or 2 yards off the line the entire game.
Yeah, that is correct.
And
It's a brand new game
we
now
got
for
Jordan
the tight
Reed
end.
coming up who helped invent this.
That's right.
I mean, it's like why I watch the NFL.
Yeah.
They made it exciting.
They made it exciting, and now the tight end is a big part of the game, and we're seeing in the draft here. I mean, it's interesting to see kind of where the game is going. A lot of quarterbacks, and question is, where do some of these big names go? But they were heavy on the quarterbacks this year.
I teared up the other day. Gronkowski threw out the first pitch at Red Sox.
Really?
Yeah, it was like too much. He could, the way they're pitching right now, he could probably help them in middle relief. Dow up 86 points. Jordan Reed's going to join us here. Paul, tell you about that. Really excited to talk to Reed of the Washington Redskins. This is Bloomberg Surveillance.
Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, traders fearing another hot inflation pour got a little bit of relief after the Federal Reserve's favored price gauge, while still strong, came in roughly in line with estimates. So the reaction from an already tech-sparked market, you have the Nasdaq up more than 1%, the Dow up 0.3%, the S&P 500 up 0.7%. To commodities we go. We have spot gold up higher at $2,337 an ounce. We have Brent crude at $89 a barrel, NYMEX crude at $84 a barrel. Over to the yield, the two-year yield at 4.97%. That's down 2 basis points. The yield on the 10-year at 4.65%. That's down 5 basis points. Earnings we go. We'll start with big oil, Exxon and Chevron. Those shares, they are lower. Chevron down about 0.2%. Exxon down 2%. Disappointing first quarter performances from both companies. Then you have AbbVie. They're up down 2%. Lifted its full year profit guidance. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. This is a lot of fun. We're going to digress here on a Friday and bring in somebody that helped change one of our major sports. Of course, our major effort here is Paul Sweeney looking at the media of it, and Michael Barr joining us, of course, from Bloomberg Business of Sports. And I remember a while back, a kid from Florida came to the NFL, and, Brock Bowers yesterday with Las Vegas. Brock Bowers comes out of Georgia, and they've already reinvented tight end. And that was Gronkowski and Kelsey, and, of course, our guest here joining us out of Florida, Jordan Reed. Jordan, thank you so much for joining Bloomberg Surveillance. When you first stepped on the field in the NFL, was tight end already reinvented, or did you have to explain to them that you could actually be far more offensive and fun as the positions become?
Yeah, man, thanks for having me. It's a pleasure to be here today. Man, when I got there was already some great receiving tight ends out there: Antonio Gates, Tony Gonzalez, Gronkowski, Hernandez. So the position was already, filled with superstars, guys making big plays in big time situations. So, I just knew I had an opportunity. The game was becoming more of a passing league now, so I was able to take advantage of it.
What do you see now in the draft? What I see, the quarterbacks weigh, 180 pounds, 160? They're not Doug Flutie. I mean, these guys, they're all younger and more agile, are they? It's completely changed the game, Jordan, hasn't it?
It's definitely changed the game. Ever since Lamar Jackson came on the scene, he's been the prototypical guy that they're looking for. Guys that could, are the most athletic players on the field. And that's what we've seen. Washington just selecting Jaden Daniels, a big pick. So that's where it's going to. You got to have that threat of running the ball.
One of the threats is Duke football. Let me bring in Paul Sweeney from Duke. Is becoming they're going to crush Florida next year.
Oh, I don't think so. But
hey, maybe Florida's been down a little bit.
It maybe on the basketball court. Hey, Jordan, talk to us. I mean, the league has become a bigger and bigger and bigger business every single year. Talk to us about, from the player's perspective, do you guys feel like you're getting your fair share there of the economics of, the NFL?
Yeah, I would say so, man. I would say I think the percentage of the money going to the athletes every year is getting higher and higher. And now you're seeing guys sign, $200 million contracts, $100 million contracts. That's becoming the norm. So, anytime you get in those kind of numbers, it's hard to complain. It's really hard to complain about that.
Jordan, with us today is Michael Barr, and his model for the perfect tight end was Ron Kramer of the Detroit Lions from a few years ago, and then Charlie Sanders as well. Michael Barr with Jordan Reed.
Well, Jordan, first of all, thank you for joining us, and second of all, you look at the records. Okay, who is the best tight end? And you look at it today, and you look at how many touchdowns has this tight end scored. It wasn't like that way back in the day when I didn't have any gray hair. Back then, the tight ends, like a Jack Youngblood, they were there just to stop the opposing player.
Yeah. Back then, it was a I formation league, run heavy. A lot of teams still have fullbacks. So the tight end's primary objective was to block the defensive end and do a good job there. now our role has expanded, and I'm glad it has because the game's a lot more fun for tight ends.
It's a lot. I'm the dumbest kid here, and let me tell you, Jordan Reed, it's a lot more fun for me to see you and Gronkowski do what you do, and these new kids as well. Paul, jump in here.
Hey, Jordan, this become, as you mentioned before, a passing league here. Is that here to stay? Is that good for the game, do you think?
Yeah, it's here to stay, man. It's here to stay for sure. I mean, the defense had the league on lock for a while, where defense will win championships. Now you see guys like Pat Mahomes with Kansas City not having the best defense in the league, but still bringing home a Super Bowl. So offense has expanded, and it's due to the passing game. Every position can run routes now, tight ends included. Running backs can get flexed out wide and run routes and beat DBs now. So it's here to stay, and now you're seeing flag football coming and starting to emerge. So I don't think it's going anywhere anytime soon.
Jordan, what are you doing in auto racing? Like, are you gearing up to do this to get into Formula One? Are you going to be down at Miami here in a week? The Jordan Reed Audi team or whatever. What are you doing in auto racing in your free time?
Yeah, it's nowadays I've gotten myself involved in another passion, a way to compete, and that's now in the Porsche Carrera Cup racing team, and that's Vision Motorsports. So
yeah, I saw that.
We'll be racing alongside F1 in Miami May 5th.
You're going to be down in Miami May 5th.
Yes, sir.
You got 5 slots for us. We'll bring Lisa Mateo. We can sit there with the headphones on in the back. I'll wear sunglasses. I got to wear a bow tie, though. But can you get us some seats at Miami, in the pit?
And I'll bring my autograph book.
You can definitely talk to the team.
Good answer.
Great. Jordan Reed, thank you so much for joining us here. A perspective there on this. And what's great about Jordan Reed, Jordan, thank you. Michael Barr, what's great about him is this is a guy who actually lived injuries.
Yes.
He didn't have the 25-year career, never been injured. He was so tough that there was a lot of injuries along the way.
Well, again, it's like, we had the Charlie Sanders for the Detroit Lions, the tight end, and that's a tough position because you talk about collision against collision.
Yeah.
I mean, that, God bless him.
But they're the same. I mean, we had Joe Fleisman on the other day. I mean, Paul, you mentioned this. I mean, it's the NFL compensation every weekend.
Yeah.
Is a risk for the Jordan Reeds of the world.
Yeah, and I think going to a 17th game, there's talk they're going to go to an 18th game, believe it or not. You have to have not 53 players on your roster, your active roster. You have to have 100 guys ready to go because people are going to be going in and out all season. So it's tough for the players.
Yeah, did I do okay there?
Yeah.
I have
absolutely.
no idea what I'm talking about.
No, man, it was like, hey, God bless the tight ends. I love that position.
And God bless these players that can build careers after their pro, because a lot of times we've seen time and time again in all types of different sports the inability of the player to make that transition from the professional game to the afterward.
Yeah. It'll be interesting to see. Let's bring you back to the markets going into the next hour. The Emily Grafeo show.
Oh yeah.
With Paul Sweeney will be on. They're going to launch into the weekend, and a lot of that is the equity restructure. The VIX 15.24. That was a 19 VIX. Paul, I'm saying Friday last, a week ago.
I know.
Maybe even Monday, we had a 19 VIX. We have a better tape. It's unequivocal. I mean, there's no other way to put it. Google with a record high. NASDAQ 100 up 1.3%. Those earnings yesterday, we didn't talk enough about them. I mean, the margin improvement, I thought Cam Dawson was great on that. Just their ability to generate operating leverage off of mid-double-digit 15% revenue growth was wow.
I mean, just looking at the forecast for next year for Google, for example, mid-teens revenue growth, EBITDA margins mid to high 40% range, and maybe $90 billion of free cash flow. That's after spending $45 billion in capex.
And
amazing.
I really want to say to all of you, when we studied this, we didn't frame these tech companies. We didn't ever imagine that. This song, I remember, this was just sort of tossed out there, and this became a ginormous hit. It's a one-hit wonder. Rebecca, Ken Foley, our global technical director's kids demanded this. Friday, Rebecca.